We're now going to move into a segment of the day when we're going to zone in on embedded finance. It's been touched on already. It's one of the most interesting areas that's developing at the moment. Delighted to welcome Kevin Telford to talk to us. Kevin's Director of Financial Services at Hmrc, which is one of a number of roles that he fulfills. Kevin's also on the advisory board at Fintech North. So Kevin's going to do a keynote. We're going to hear from the CBI, and then we've got a panel. So, Kevin, after you.
Okay, thank you. And it's great to be in Manchester and amongst some of the great supporters of Fintech North. And of course, this has been recorded and it'll go out to a much wider audience, but really looking forward to talking to people after this event as well. I'm going to cover quite a complex area, but hopefully we can get it down into 2 or 3 simple things. So, as Julian said, I'm at Hmrc, but I'm also an advisor to a number of other organisations like Near One. So I wanted just to put some simple context to what we've been talking about this morning. And this is really from our perspective. And I think there's another perspective to look at, which is from the customer and the impact, and we'll talk about that. The impact on economy, environment, and society. And I think that's the real things that we should be measuring. 6 million is great, but what impact has it had on society? How many more vulnerable customers have we served? How many more people have got access to fair finances? So in the context of what we're talking about today, open banking is pretty simple. Open finance takes us to a new level. And Open X, or whatever we call it, as you've heard this morning about opening up other data assets, there's countries already doing that. And we'll touch on some examples. So I'll try and give you examples as we walk through. And of course, what we're going to be talking about now is this concept of embedded payments. It's been around for decades. It's been part of Amazon and others. And if you go back even centuries, embedding payments and support and advice has been around for a long time. So we're talking about the digitization of this. But the key here is how do we enhance the customer experience and what innovation can we deliver at the point where payments take place. So to give you some sort of idea, when advising clients like retailers or other sectors, you have to take a holistic view to this. The first view, of course, is in open banking, but it's the use cases that come with that as the language that we talk about. Is that how do we get access to finance through behavioural credit scores that normally people wouldn't have got on an old-fashioned credit score? So what's the use cases for that? How can we take what we've learned in open banking and take that into other sectors? And then, of course, this concept of having your wealth in all in one place. I don't think an individual might want that, but they might want to create a single view of that. Your assets, your property, your shares, your income, whatever that looks like, might be really useful. And there's real examples that's happening, starting to happen, particularly in the US, where the legislation is a bit more open and allows that to happen. Now we get right to the core of embedded payments. The digital wallet won't be around for very long, because just like we made the mistake of open banking, we call it a digital wallet. It's much more than that. And we'll talk about how the digital wallet will become embedded identity, embedded affordability, embedded vulnerability, and things like that. So we'll talk about actually what it means to have a digital wallet from a customer's perspective. And I think that's a really important change. But right at the heart of this, there's 2 sides to this. There's the technology side and the implementation. But the new data source that's coming off the APIs has a richness. And just talking to a few people this morning, that's largely untapped. One of the organizations that I advise has got 4,000 plus integrations with banks, but 4.8 billion transactions. How can we create a new economy out of the data that we're producing? Maybe it's benchmarks, it's research, or actually maybe it's a new age credit score, which is exactly what we're doing. So it's not just a byproduct of all these integrations, it's actually taking the data assets and really doing something with them. So in terms of where we are, this is a shout out to everyone in the room here. Actually, when you read that slide, it's you. So in the top left-hand corner, you've got answer pair. Yeah. So you can work out exactly salary advance, tipping in a way that's compliant. And all of these individual things will be part of whatever the digital wallet looks like. It won't be applications everywhere. It'll be a single user interface to what you organize your life and how you want to see your life go forward. And I've got some real examples of that coming out of China. where the legislation actually opens that up for different reasons. So I think what we're talking about here is whenever you're starting with it looks like a digital spine. It looks like core components that you can integrate and have interoperability between partners, because this is all about collaboration. So at the bottom, it always starts with trust and ethics, privacy, governance, being on the side of the consumer, making sure that you've got your ethics embedded in the design right from the front. So what's your purpose? Why are we gathered here today to look at the design of a product and service? What's the impact and the value that we're trying to create? And we can get a million use cases, but what's the one use case like you've done in the room here that you want to stand up to make an impact? So you need to start right at the bottom. Now this is not about middleware, it's not about legacy and banks, because the banks will be largely part of your opportunity to go to market through corporate innovation and corporate investment, as well as whatever investment you take. So you need a courageous leader to stand this up. You need people like Alison Rose at NatWest, who's saying there's £2 billion. Now go and sort yourselves out, get SMEs balanced and get gender equality right on the agenda, and give people a chance to start their own business and tech and data and STEM, whatever it is. So you're seeing great initiatives like that. You're seeing Kirsty Rutter, who's standing up at innovation in terms of horizontal through the organisation, but that's backed up by a CEO was brought up by a single parent and really cares about how he helps his customers in certain areas. So you need a sponsor for this. But the second part of it is really where it starts to come together. And so organisations that I work with, like Checkout, Modular, Yapily, it's all about this middle layer, about how you're going to connect your products and service to the marketplace and how you're going to scale that. So you design it and you build it in a standard that is interoperable from the beginning, and it's a set of components. And that will give you the best chance that when you rock up and you want to do an integration, that you're there at the point. And I see a lot of movement in terms of data classification coming out of this. I see a lot of organisations starting to group the data in a way that it is interoperable, so transportable, interoperable, and most importantly, understood. So when I receive another data from an organisation on a trusted platform that's been identified and verified with the consent and the permission, that I can use it, and I can use it side by side. So embedded payment, embedded finance knows no boundaries. So I'm currently working with an automotive manufacturer, and they will buy a microservice payments company very soon. Why? Because the automotive is becoming API integration, experiential, and they'll build a multimodal transport loyalty platform on top of that, where you can pay for a car share by the hour. I can be insured that when I go cycling at the weekend, for that hour I can be insured for the bike. My kids can get insured if they're jumping in my car, because it automatically recognises that it's my daughter driving. So things like that, these are real live examples that start to come through. But it's good to have some people on from the data side of it here. I think that it's quite often overlooked. So as these smart solutions start to get put into practice, you can now start to use the data for innovation, data-driven innovation, because you can do your research on that. And this is big data really cut down to small. So when we're doing design, we start to think about what's the purpose, what's the use case, what are the data points that we need to stand up the proof of concept? And do we have the data assets with the permission to do that? Or do we need to move to a sandbox environment to get access to the data? Because before we take that to market, we need to test it and make sure there's no bias in the algorithms. We're not excluding people, or we've overlooked the actual design of those APIs and ML. So I guess in terms of three simple things, to get this up, it's all about culture and ways of working. It's about, do we have the right cross-functional team in the middle, that with the right culture, the right courageous leader, with the right support, with the right ways of working around agile or whatever our preferred ways of working is. And on the outside, you've got four simple things. We need to look at the customer engagement. And I also see a new age of a CPO, whatever it looks like. I think culture is owned by everybody. But I think in this context, the rise of the chief product officer that is techie, data, puts customer first, has a knowledge of what's going on in the marketplace, but above all has the culture to start with that horizontal that we talk about. Purpose, problem, purpose, use case, value, impact. And that's as we start to design that, you've got people from MasterCard that are always standing these sorts of things up. They're looking at how can we make accessible finance, or how can we cut across sectors and improve other sectors. So you need the engineering business capability, but what this does is that it's a simple target operating model where you get underneath the org structure to it, how you organize yourselves to make an impact. And quite often, once you get the courageous leader at the top's mandate, we in the frozen middle, because we want to do this stuff right, we want it to be commercially viable, but we want to be involved in projects that make an impact, and we can track it through the society, economy, and environment. Really? Well, it's starting to happen now. You're starting to see a number of organisations, you'd be like Kogo, start to track your ESG and your carbon footprint, but there's no global standard for that. So maybe that those organisations, those 33 in the UK, start to come together to create what that kite mark might look like and what the measures might be. So it's cooperation around your competition as well, because we don't want to go off and set out a set of standards that everyone else is working differently too. So it's about ways of working and cooperating. And I guess as we look to the future, is that what a purpose-driven business looks like is that you start at the bottom and the start of what's the customer value that we're trying to bring. Are we going cross sector in terms of got financial service proposition to underserved parts of society, and they have mental health issues faced by rising prices, faced by the things that keep them awake. As this morning has just announced that many of the customers are putting a £30 limit to how much they can spend in store. What century are we in? Why aren't we focused on those areas? And we're starting, Virgin Money launched the basic bank account. We've started to embed help into vulnerable customers as part of the customer journeys. And they're looking at new ways of that they can serve and then bring other corporates to help those vulnerable customers. So some real examples out there. But the key is that whatever you build, you need to think about marketplace and ecosystem, because that's where the scale is. That's where you don't think about it necessarily as competition. So you take Starling Bank, who's created a marketplace, absolutely flying. It's not all things, it's not a department store, it's related to the customer and the relevance. So an example, BA is now starting to finally book a ticket, travel insurance. But it's not travel insurance at BA, it's travel insurance all the market. Well, that's useful to me. I know that I'm getting a good deal and it's one step, rather than booking my flights and coming off and then having to look for travel insurance. Or it's Visa or MasterCard building that in as part of their offer. Book with us and you automatically get protection on Glastonbury tickets, so that if you can't make it to through a train strike or whatever it is, we'll give you a refund. So some really simple things that you can start to build out. And as you get to here, the future is the wallet will be plus plus. The wallet will be someone like Tesco that integrates their shopping and their loyalty, but also is attached to a marketplace. And they might even be cooperating with Amazon. Because if you're not in the space of being in the data game, you're going to be left behind. But you need to do the data game on trust and ethics and the foundations of your business. And I just came off a keynote last week with a friend around that. You have to start there. And I think that's a really important point. So some examples of what's out. We've touched a lot of this this morning. But integrated autonomous money, sweeps, recurring payments, overdrafts, all of that, that's here and now. But what next about that apply to a mortgage? I'm in the gig economy, I'm a first-time buyer, and I struggle to pay every month. Well, here's a holiday, because we know that when you come up to after the school holidays, you'll be back in business. So it's about different payments and different applications, really simple ways that you can embed embedded finance into your customer journeys now. Or I think that it'll be around people decisioning. And what do we mean by that? The decisions that are made for us will be autonomous. We've got the subscription management that we talked about this morning and here in the room, where we can automatically see that you're not using that subscription, or we need to take you off Sky at the moment and drop you onto Amazon because you've got to save 30, 40 quid And right now you could do that. Or actually we can automatically take roundups, and so that will be autonomous. We'll be part of it, and you will be in control. You'll have sliders that you can just slide along. This month, this is the situation I'm in. Another example is that project that's stood up now. It's around SMEs and faster payments. We all know that cash flow is the number one problem. If you ask an SME, actually the number one problem is selling more and then getting your money. So there's two parts of that coin. It's just a different perspective. What if we can incentivize some, eco-spends data, or combined with Sage, Zero, Intuit, etc. But they come together on one platform and say, right, we're going to prove that if you pay us faster, it has a direct impact on GDP. Easy to say, but difficult to do, because to get the data points is almost impossible. But once you've decided what the data points are, you need to collaborate. You create the sandboxes out of it. You've got part of your answer. So part of the country that I come from, it might be someone like Nissan, who's got 3,500 employees. They've got 8,000 SMEs attached to the distribution of logistics. What if we just tested they're paying on 57 days, and that's not true, by the way, it's just a statement to prove a point. So say they're paying on 57 days, what if we could bring that forward and say 5, 10, 15, 20, 30? Because SMEs don't challenge the corporate because they're frightened to lose the contract and get the input and charge more interest. So the behaviours there are built into the fact that there's no solution for that. But what if you then said, well, if you paid on 20 days, that's flown through the economy. We can see early indications in the 6 months through a levelling up index. There's more jobs being created. There's more inward investment. There's more things happening around education and training our kids to be tech and data savvy when they come out of school and job ready. I often hear the entrepreneurs say that I can't afford the talent, and the talent's tough to get, and I can't afford to train them because they're not job ready. So then you start to think, well, what's the intersection there that we can start to play between small business and the community and the corporates that I've just mentioned. So that's a real project. The early indications are it might be that we can reduce corporation tax to incentivize big corporations to pay small, medium enterprises faster. That'll be a project that comes out over the next year, but that's the sort of thing that we can do as a byproduct of open banking for SMEs, where we see that data maybe shared in a really useful, purposeful way, and GDPR having been part of writing that, and being part of the CDR in Australia, a very small part, but an important part, is that we can declare that in the principles of the legislation that allows us to do longitudinal studies that has an impact on economy, environment, and sustainability. So the legislation can be principle driven, and I just wanted to do that segue from the last call, sorry, the previous one, to say that we can do this in industry, and that real use case of SME collaborating around a common purpose. I'm really excited to see what happens out of that result, because we all know the answer, right? Faster payment will have a positive impact. So I can talk to anybody around the specifics, but in interest of time, I can give you examples around health and well-being and financial services. There's people in the room here that are working on gambling and helping vulnerable people in that, and are starting to think about how we come pre the problem rather than post problem. So that's it in a nutshell. I hope you enjoyed it, and I look forward to hearing the rest of the speakers.
Thanks. We're not going to do questions straight after Kevin's slot, because he's going to be chairing the panel, which will come after the next presentation. Joe, you're going to introduce the next slides.
Will do, thank you, Julian. Yeah, as I mentioned right at the start, today's held in partnership with the Confederation of British Industry, and they've been working on a campaign all around, it's called Winning with Fintech, and it's all around evangelising the benefits of fintech innovation to kind of level up the UK SME community, I suppose, and make sure that they're aware of all the latest fintech innovation that's out there as well. So I want to say thanks to the CBI for partnering with us on today's conference, and really excited to hear what Megan's got to say. So yeah, I'll introduce Megan like that.
Thanks so much, Joe, and apologies that I can't be with you there in person today. As Joe mentioned, the rail strike certainly had other things planned for me today, but I am really pleased that at least some of you managed to make it into the room on the day. Just to introduce myself, I'm Meg Coulson and I lead the Financial Services Innovation and Payments Brief here at the CBI. For those of you who don't know us, the CBI is the UK's largest business representative organisation. With our trade associations in membership, we represent about 190,000 businesses, from SMEs right the way through to FTSE 100s in every region and devolved nation in the UK. Ultimately, as an organisation, our aim is to achieve a healthier, more diverse, greener and innovative UK economy. We want the UK to be the most dynamic, competitive and future-focused economy in the world, and we want businesses to be leading this change. This is what we outlined in our Seize the Moment campaign and what defines our policy work here at the CBI. From a CBI perspective, we really do think that fintech can play a key role in achieving this vision. And this is why we recently launched the CBI's Winning with Fintech campaign, aimed at getting more businesses using fintech to fuel future growth. So over the next few minutes, I just want to give you a bit more detail about the campaign, some of our initial findings from research we've been doing specifically on the role of payments in businesses, and wrap up with what's to come and how you can get involved. So what is Winning with Fintech? Back in April, CBI President Lord Bullamoria launched the campaign at City Week. And this is in the context of businesses facing a range of challenges as they come out of the pandemic, from spiralling costs to supply chain challenges against the backdrop of continued uncertainty. Managing risk and improving operations is vital for any business that wants to get ahead. And so the CBI really wants to move the dial on winning with fintech, to get more non-financial services firms engaged with financial technology to help manage their costs, make efficiencies and go for growth. In the current climate, businesses need all the support that they can get, with fintech featuring a flotilla of benefits, making global trade smoother, payments easier, and sustainability better. We believe the UK's world-leading fintech sector is ideally placed to go from strength to strength in supporting businesses to manage risks and reduce costs in an uncertain world. The CBI will champion fintech by supporting businesses of all sizes across sectors to seek solutions that will work for them. The aim of the campaign is to take a deep dive into what it means to work in partnership with fintechs and related technologies from a business perspective. We'll also highlight case studies of successful fintech corporate partnerships and best practice on how businesses can start or continue this journey. The campaign aims to answer key questions to improve that level of engagement with fintech businesses across the non-financial services sector. So for businesses, how can working with fintech help me grow my business and secure operational efficiencies and cost reductions? How should I work with fintech companies themselves? What do I need to do to understand and act on this opportunity? What are some of the typical uses at a practical level? Which steps should I consider taking to start partnering with fintechs? And how do I find out who is doing what in the products and markets that I care about? And for you, for fintech companies, how can I engage to better support a wider range of businesses to grow and realise cost efficiencies? What do I need to do to support a range of clients, small, medium, large, digital, non-digital? How can I best present my solution in a business context, as well as navigate a fintech non-financial services relationship? The first focus of our work has really been looking at innovation in the payment space and how this offers up new opportunities for business. We've been conducting some deep dive interviews with a cross-section of CBI members, from SMEs through to some of our larger corporate and retail members, to really understand what their payment pain points are, what the levels of awareness are around some of these technology solutions out there, and what might be holding them back from partnering with more fintechs to address some of the problems that they are facing. In the coming weeks, we'll be launching a comprehensive toolkit on the payments industry for CBI members, including a view on the fintech ecosystem, key fintechs by their use case, as well as those solutions. But I did want to share a few insights with you today, given that the focus of this conference is all around the future of payments. The challenge that we wanted to address is that information around fintech solution is often perceived as confusing by many businesses, and the market currently lacks an organisation that understands and addresses the needs of both industry participants and fintechs themselves. the CBI felt it was well placed to start addressing some of this. What we know is that businesses can benefit significantly from implementing innovative payment solutions offered by fintechs, whether this be increased speed and transparency of payments, enhancing cross-sell capabilities, through to meeting and exceeding consumer expectations on user experience. To better understand this, we've been working with Bain to conduct some qualitative interviews, both with CBI members to understand those specific payment challenges they face, and interviews with fintechs to assess where their solutions could help. Off the back of this, we've identified that all common payment processes that surfaced during the interviews fall within 4 major activities. Firstly, around accepting consumer payments. Secondly, paying suppliers. Thirdly, paying employee salaries and expenses. And finally, how businesses manage their cash position. For these activities, we know fintechs have developed solutions which can support both large businesses and SMEs. Just to take a deep dive on one of those, around paying salaries and expenses. Off the back of these interviews, we identified businesses are facing a number of pain points in this space, mainly around the inability to pay employees flexibly. Many are still relying on manual expense management processes, and some fed back that they have limited transparency over managing their expenses. Solutions that fintechs can offer to these problems include full managed payroll and payroll software specialists, advanced payment providers, as well as expense management solutions. This is just a really tangible example of some of the frictions that businesses experience on the daily, with solutions out there to tackle this, but more needs to be done to bridge the gap between supply and demand. And this is the whole purpose of the CBI's Winning with Fintech campaign. As I said, a comprehensive toolkit will be published shortly, and we intend to produce similar toolkits in how fintech can support businesses' global trade ambitions, as well as companies' decarbonisation journeys. We're so pleased to have kickstarted this campaign and have some really exciting activities coming up, from matchmaking events to deep dive roundtables on specific pain points we've identified within our membership base. Please do reach out if you'd like to get involved. We're always on the hunt for new and innovative technologies to showcase on the CBI platform, and I would like to take this opportunity to personally thank Joe and Fintech North for their continued support of this campaign. So if you feel like you have a solution to offer in the business space, then we at the CBI are all ears. I'll wrap up there and wishing you all the best for the rest of your conference. Thanks.
Thanks to Megan for that. Now we're moving on to the Embedded Finance panel. Obviously, it's great that she could contribute to the conference still. She was due to sit on this panel, so it's good that we can be, kind of with her virtually, I suppose, and she can be with us. I suppose I'll be introducing Kevin back up as chair for this bit, and we'll be introducing David Joyce as well. And we've got Greg as well in the audience. Hello, Greg.
Thank you. Just before we start, I know there's a lot to take in from my deck. I'll share it with you, and if you want any more commentary over it, I meant to be giving you a long story, but in a short period of time. And my time was cut down a little bit, and I didn't cut my slides down, but I'm open to having a chat with anybody. Okay, so I'm really pleased to welcome Dave and Greg, and we'll start off with a few introductions, and let's start with you, Dave.
Thanks, Kevin. Hi, I'm Dave Joyce. I work for an organisation called Weaver, and perhaps we'll talk a bit more about that in just a moment. For my sins, I've spent my whole career in payments, so the last 30 years, spent 20 plus years with Visa in Europe, and over the last 10 years with scaling fintech businesses, helping them to unpick and unravel the murky world of card payments and bank payments. I live up here in the northwest. My wife is from Burnley, and so the right side of the Pennines. And it was always the plan to move up here. I'm glad I did. We wanted a better quality of life. But also I'm a big champion of the North and what it can bring in terms of talent and resources to the fintech ecosystem. So much so that I championed our office in Newcastle that we opened just at the end of last year, and I'm hoping this is the beginning of a long relationship with the Northwest and the Northeast, because the centre of the universe is in London.
It's Newcastle.
It's a bit about Weaver. We really are a business. It talks to a lot of the things that Kevin was talking about in terms of we're very much the bridge between innovators and financial services. Businesses that want to get access to financial services, payments, they need to find a quick way to market, a way that allows them to test what's going to work and what's not. Equally, there are financial service providers that want to access and work with these innovators, but find it difficult to because of their business models and the risks involved. And so we see our role as I say, very much being the bridge and the orchestrator between those two communities. I've probably said enough. I'll hand over to Greg. Oh, you got one.
Too many microphones. No, yeah, thanks very much, Dave and Kevin. So I'm Greg James. I'm a senior manager with Fscom. So brief introduction to myself. I've been in financial services now for about 10 years, well, give or take. And in that time, been focusing on quite a few different roles. Probably most importantly for our discussion today is within compliance consultancy, focusing majorly on payments, e-money, and that sort of space. The very general term Fintech, kind of comes up, which can mean a lot of things. Through that time, I've been helping firms through the entire journey of being regulated. So from authorization to maintaining that authorization and maintaining your compliance, and even enhancing your permissions when the time arises. Bit of an intro to Fscom then. So Fscom is a governance, risk and compliance consultancy company, founded in Belfast. That's where I'm from, and why I might sound very tired today, because I did fly over at 4:30. But that is, it's based in Belfast with offices in London and Dublin, focusing, as I've kind of said from my own experience, on payments, e-money, but also within areas of investments, MiFID and AML. Keeley, but I think that's enough plugging.
Great, thanks, Greg. So I guess even being in the industry sometimes puzzles me. What's the difference between banking as a service and embedded finance, Dave?
I'll give it a go. I think for me, embedded finance is really a progression. If you bear with me, if you cast your mind back, first there were banks, and banks offered financial services. And then the advent of the schemes, and I'm very, sort of proud to be part of how Visa developed here in Europe. But that the schemes brought access to financial services, brought access to payments. And that attracted the interest of a lot of other businesses that thought that they could also specialise in offering payments, financial services, organisations like program managers. And that was a business that really kind of thrived during the 80s and 90s. And with it brought the need for more regulation and the emergence of things like PSD and PSD2, and the emergence of entities like EMIs. And then what we saw was we saw a great unbundling and a great restructuring of financial services. And that's kind of where BAS emerged as a set of services that businesses could access, but in a very raw way. I think, as many people have said, and Mike referred to it this morning, payments is a very deceptively complex process. There are manifold entities and manifold points involved in the execution of a payment transaction, and all of it sits behind the scenes. BAS gave access to businesses to be able to access those financial services, but it came with a cost, because as we've talked about, and Greg will know better than most, access to those financial services comes with a responsibility in terms of maintaining the trust, maintaining the credibility of the network. And that means compliance, that means managing risk, a lot of topics and a lot of things which digital native businesses either aren't aware of or really don't want to be bothered with. And so accessing these financial services also brought this overhead of having to manage compliance, risk and manifold other things, perhaps a distraction from the core business. And so I think embedded finance is really that kind of progression. It's that next step from BATS, where, and certainly this is our approach at Weaver, is I see embedded finance really as being about two things. One is about context. Context is everything. If you can provide a safe way in which you can execute a transaction for a specific need, that's a lot easier, a lot simpler than perhaps exposing an API and allowing innovators to perhaps indiscriminately offer those services to vulnerable customers or to have them used in ways that they didn't anticipate. So I think it's all about context and being able to bundle up that particular payment service around a particular use case. And I think the other piece then is around orchestration, which is how do you bring all of those moving parts together and take away the complexity for an innovator to be able to integrate into that ecosystem. Sorry, that was a very long-winded, perhaps,
very
view.
useful.
But,
yeah, thank you very much. And Greg, I think that that leads us on to the next question in terms of, so what's the challenges with embedded payments, and I guess conversely, what's the opportunities that you see?
Yeah, so I mean, I'm going to focus on this from a compliance perspective, as you know, my background would suggest. And I think what's really important here is to understand for a lot of embedded finance or embedded payments, or you know, however we're referring to it, despite the product being sold to the merchant or an innovator or another legal entity, actually pretty typically the regulated service is provided to the end user or the consumer at the end of the very start of the process. And that can create a couple of issues. So one of which is kind of this cultural shift. So you've got a sales team over here and an operations team that are very focused on selling to these SMEs or these merchants. But actually you've got a compliance team over here that's actually concerned with, well, how are we protecting, how are we identifying, and what are we doing to kind of maintain our compliance with these payment service users or the end users. And I think that's kind of a cultural shift, because we've got two sections of the company talking cross purpose, and anybody here working in a regulated service knows that there can be some tension between compliance functions and sales and other functions. That comes with the territory, unfortunately. So that's one of those areas. So just kind of a cultural point to drive home with embedded finance is that your obligation from a regulatory sense lies with that end user. Not to say that you don't have some sort of obligation to your customer, the merchant, but you should be aware of that. What also spins out of this is, well, okay, so your sales team are now focused on onboarding this merchant. In an embedded finance world, what that means is you're not just onboarding that merchant, you're onboarding the 100 to 1,000 consumers that they're bringing with them. How are you actually going to manage that on an onboarding basis? Not just from an efficiency perspective, can you onboard these people, but also hitting all of your compliance obligations within that, your AML obligations, and potentially vulnerability, which I will touch on. So, you know, how do you actually run that? And you know, at the end of the day, that is going to result in a far more close conversation with sales than compliance is typically used to. They tend to stay out of each other's way. But this conversation will need to be from day one, when you first contact this merchant, all the way to onboarding them, because you need to spin up any kind of additional resources you need to do that. Then we also have vulnerabilities. So before I go into vulnerabilities, it's probably worth me explaining what I mean. So the FCA has particularly focused on customer or vulnerable customers over the past few years, culminating in a bit of guidance last year. And what they mean by vulnerable customer is effectively somebody who is susceptible to harm due to their personal circumstances. Now, that can come in a variety of different ways. That can come through life events, bereavements, divorces, things like that. loss of job. It can come in the form of health issues. It can come in the form of resilience or otherwise issues. So these people. So why am I focusing on that from embedded finance? And typically, similar to the issue we get when we onboard this merchant, you'll also get these industry verticals. These industry verticals can suggest higher risk factors within that industry, not just on an AML perspective, but within a vulnerable customer perspective. For instance, if you do have a gaming or other vertical for embedded finance, you need to consider that within your vulnerability metrics and within your vulnerability frameworks, and ensuring then that where the company goes to onboard different or goes to explore different verticals, there's new opportunity with a large merchant over here. Well, you need to be able to apply a sensible framework to that. And you need to apply it quickly because there's about to be 1,000 customers coming your way whenever you onboard one. And I think that's key. I believe then we've got the other side of this, which is
the opportunities.
What's the opportunities? Trust the compliance guy to start with the negatives. So opportunities here are, this is actually a really good way of me selling that a world-leading compliance system is beneficial, because usually these arguments are fairly fluffy and it is hard to get across. But in this context, the speedy onboarding of all those end users or all those consumers is absolutely essential for you to for you to compete with anybody else in that market. And why go to yourselves rather than your rival embedded finance provider? And you can't just cover your eyes and pretend your compliance obligations don't work, because instead of getting it wrong for one person, again, you've got it wrong for several hundred to possibly thousands of customers, which is a different it's a different scope of issue. There's also, of course, buy now, pay later. That opportunity is starting to mature. We see that with Apple entering the market, which brings an air of legitimacy to the market, because it has great mainstream recognition. If Apple is going into something, it's typically all right to go into. That is, and also the fact that it's becoming regulated, which I'm sure we'll discuss at some point later on. But I think what's absolutely key here is to understand that buy now, pay later is a maturing opportunity, and it is an opportunity that has received some bad feedback or negative feedback in the mainstream over the past year or so, with massive hits to their market share, to 96% for some Australian buy now, pay later firms, and also because they're getting regulated, people have highlighted some of the risks that exist there. So that opportunity is maturing, and it will be explored further by the market.
Thank you. I can't leave it without a comment, because I was Group Strategy Director for a credit referencing agency way back when. And I think that Apple will get it right. I think they'll start with affordability and vulnerability embedded in the wallet. And I think that's when you start to see the disappearance. It'll be identity, it'll be verification, authentication, and it will be affordability and vulnerability. But not leaving the people that are vulnerable behind. They'll have products and services that's automatically embedded in that proposition. So it's not like we're going to turn you away. They'll be rapidly developing new products and services to support that. I guess the last point of that is that'll see the movement around more ethical lending, if you like, even though it's Apple, and we'll still have question marks over that. But I think that if we can help people throughout the customer journey and not leave them behind, I think that would be interesting to see what Apple comes. And by the way, hats off to Credit Kudos and Freddie for that. It's another northern business that's done well, and I think that testament to you in the room as well. So I hear that. I hear conformity. I hear governance. I hear compliance. I hear risk. I hear liabilities. I hear all the things that the challenges up front. So over to you, David. I think that, and when you describe that as plug and play, how do you take a plug and play with all that complexity to the market?
Yes, I mean that's the challenge, and that's our mission. That's why we raised the capital we raised at the end of last year. we spend a lot of time thinking about context, and making sure that we're driving towards this plug and play world. It's very easy, as Greg said, to screw it up on the regulatory side of things, and all of a sudden you've got a real headache on your hands, and it's not your core business. A lot of the businesses in this room, a lot of businesses that we talk to, their core business is not payments. Their core business is not finance. What they want to be able to do is they want to be able to embed a financial element into their core application in order to monetize it, or in order to offer an additional service to their customer or to the ecosystem that they're serving. And so they really don't want to get involved in all of this complexity. So we spend a lot of time curating that internally. We spend a lot of time understanding the complexity of the compliance environment. We spend a lot of time looking for partners that can offer up very specific solutions to us that we can integrate into our app. And we become quite disciplined in it. And so we've gone down this route of this kind of plug-in approach. And so we look at a particular use case, whether that's supplier finance, whether that is person-to-person payments, whether that is consumer payments for specific applications, whether that's money transfer. And we try to really boil down that use case, that journey. And I suppose the best way to describe it is we try to put the guardrails up to say, right, so this is a plugin, this is a particular application that you can use to do this specific thing that is going to help you monetize your solution. I'll give you a couple of examples maybe to bring it to life. So we have some clients in the gig economy, and they want to be able to offer their customers, their ecosystem, the ability to be able to spend money whilst they're managing their cash flow. Right, the big issue for all small and medium-sized enterprises is, how do I, back to your point earlier on, how do I win more customers? How do I service them, and then how do I get them to pay? And there's always going to be that cash flow element. So one of the things we've devised is a particular plugin for SMEs to be able to use, so that they can offer to small and medium-sized enterprises access to money, and they access it through a card, whether that's a virtual card, a physical card, or Google Pay, Apple Pay, and that's embedded into their core app. We have other customers who, one in particular, who wants to develop a community of like-minded individuals, actually in Spain, and they've developed this brand and this community where people initially are just on there kind of promoting their own businesses, promoting the region. And then they said, well, actually what we'd like to do is to take the brand a step further, and we'd like to be able to offer a financial payment element within the community. And again, we worked with them to develop a particular plugin that works just for that. So it won't work anywhere else, it just works for that community. So I think there's tons of opportunity out there. I think, especially right now when the VC markets have tanked. You pick up any social media feed, and you can see what's happened to the valuations of a whole bunch of businesses here in the UK and elsewhere. That doesn't take away the desire of these innovative digital businesses to want to be able to offer financial services. The problem is where does it fit in their roadmap, right? So it's kind of like they've got 10 things they want to do this year. Where does let's say financial services is number 9, and actually now they're going to have to cut back and only offer 7 or 8 of the things that they want to do. What we think embedded finance, and certainly ourselves and a number of other businesses like us are trying to do, is to say, no, you don't have to take that off your roadmap, because actually you don't have to invest hundreds of thousands of pounds getting into bed with financial service providers where you're going to have to bring on all of the burden of compliance. You're going to have to orchestrate those payments yourself. You're going to have to find out the hard way. Actually, we can do that for you. Of course, there are compromises, but we can do it for a fraction of the cost, and we can get you to market in weeks rather than months or years.
Thank you, Greg and Dave. I think we'll open it up to questions, please. I can take it in the context of future of embedded finance and the context of what we've heard from David and Greg. Julie.
I guess picking up a little bit on what you were just talking about, Dave.
Yeah.
If there was a business owner and they're wondering where to start, and what they'd like to offer a finance facility, but they don't. What's the kind of logical way for them to start to explore that? Because clearly the dynamics would be changing somewhat now based on what we've just been talking about.
Yeah, I mean, there's a little bit of chicken and egg in all of this, and I was talking to somebody just over lunch about this. It's a fairly nascent idea, this whole embedded finance economy, and whilst there are examples of it that go back many years, I think there's a great deal of ignorance, and I don't mean that in a pejorative sense, about actually, could I actually offer a financial service within the context of my app? And then once that kind of light's gone on, it's like, so what do I need to do? And I think one of the things that people really need to be clear about is what problem are they trying to solve? There are a gazillion apps out there that are focused on doing, or maybe not focused on solving real world problems. And so I think that's where talking to businesses like ourselves, what we can help to do is to really be clear about the use case, about the problem that really is trying to be addressed, and what particular solution, and keeping away from having to talk about the complexity that sits behind it. I think that for me is don't be put off by that. Come and speak to businesses like us and others. It's not just a plug for Weaver, but where we can talk about the business problem you're trying to solve, the best way to solve it, and actually don't fetter yourself with trying to sort of like boil the ocean and understand all of the rules and regs that go behind it. So try and keep it simple, and be clear about what it is you're trying to do, and start somewhere, and start now, because it really is an area of business and society. I mean, Kevin talked about it earlier on, whereas there is no time to wait. If you're waiting, you will be left behind.
I'll ask another question. Well, I was thinking about the discussions we were having earlier about partnerships and how the financial services sector is often sort of linked together and offered sort of white labelled or partnership services to link different products and services. Because let's say building societies, for example, don't offer insurance and payments as services because they focus on mortgages and savings, but they'd have partnerships with IFAs or insurers. Does embedded finance kind of does it redesign that and offer a different opportunity, and then make it a lot easier for multi-product financial services brands? So not just about, say, SMEs using finance, but the financial services sector as well.
Short answer is yes. The complexity behind it is not to be underestimated. You still need the tech savvy, the data savvy, the compliance, the reg tech, whatever you need to hang it together, like Dave said. But it certainly makes it easier to embed it in the customer journey and the experiences. So where you think you can add value in adjacencies, then by having partnerships in your marketplace, absolutely 100%. And that's changing the market massively. So when I look at what Checkout.com in the UK, another good stand-up, £100 billion valuation organisation that is stood up in such a relatively short time, I think that you've got to look at the ways that they're innovating. I think if you look at the likes of MasterCard, Nationwide, NatWest, Virgin, they've got a new way of standing up innovation. They're either cohorts and challenges, but they put the money behind it. They put the backing of the mentorship behind it. And they then create the environment that you can succeed. And that's often in a position where you're extending your services or adding more blue label type of, where it's still maybe co-branded. But the benefit of doing that, the customer is in the journey. We just have to make sure that they're getting the right deal and true value from that. But I would look at corporate innovation over the next 5 years as a real way of SMEs to collaborate and scale faster and get into market faster, because they're open doors. talk to someone like MasterCard, they're up and running, trying to help the SME market and innovate fast, and they truly are collaborating and working to that. So short answer, long answer.
I mean, if there's time to, I'd just add to that. I think you're right. We're sort of actively talking to Visa, to MasterCard, about how they can help us help other businesses. I think the long and the short. I'll be a little bit provocative in terms of, if Kirsty was here, I'd say the same thing, which is I actually think the banks are massively on the back foot, actually, in terms of where you are asking the question. I don't think a lot of this embedded finance business is going to take place in a banking app. I think the banks will find themselves being very much the source of funds for a lot of this. There'll be the people that perhaps underwrite some of this business. But I think the real, and so I think they have acknowledged that. I think that some of the schemes as well is they see themselves as a way to enable and to ignite volume into their own businesses, whether that's some loan volume or settlement volume or payment volume via building strong communities and strong partnerships with SMEs who can be nimble, who can be fleet of foot. And I think that's really the key to it, is making capital available and support available to get these businesses driving volume through these large pipes.
Just one important point. I kind of go away without mentioning talent. The talent that we're talking about probably doesn't want to work for a bank.
Yeah,
that's the bottom line. Yeah. And I think that in cultures and they've still got a long way to go to make the ways of working enticed for people that want to make an impact. I think that's a big challenge. However, they will catch up, but a lot of it will be through merger and acquisition. What will be the new way that Lloyds have stood up a way of getting your SME up and running in the bank in 5 weeks. 5 weeks, so that they work with you and do design sprints, bring you in and get you embedded. So I'm getting paid as an SME. And I remember those days when I was doing it. That I said it, the first thing was sales generation. I still believe in that, but secondary is cash flow. And so I'll give it to Greg. Greg might have a point of view.
I mean, pretty covered there, but I mean, we see the banks somewhat taking a back foot in other aspects of embedded finance. AIS, PIS, explicitly the bank is taking a back seat to the user interface there. So it'll be interesting to see will banks slightly fall into the background and be the infrastructure and the underwriting, as Dave said, and actually the front-facing tech and the customer relationship really sits with and actually the mainstream kind of awareness lies with the technology providers. That is an interesting potential for the future.
Did you want to close that? If I just take over.
Are we on time? Oh,
you're on time. Yeah, that was perfect. Yeah.
Okay. Yeah.
No, I'm done.
I guess we're done.
Yeah. Well, look, let's give the panel a round of applause. Thanks, Kevin. Thanks, Dave. Thank you very much, Greg.
It's a fascinating subject, I have to say. I think you'll see embedded finance as one of those topics that's just going to be on all the conference agendas this year and for the foreseeable future, along with things like crypto, of course, and metaverse, as we were talking earlier. So now we move into the sort of final segment of the day, which is when we have a showcase of fintech speakers. So if you've been to our events before, you know how we run this. We give people a sort of fairly tight brief in terms of the amount of time they can speak for. I think they've got a maximum of 8 minutes, and we ask the speakers to pretty much pitch what they do, and then a chance to ask them questions, and then we move on to the next speaker. What we're going to do to sort of streamline us through to the end of the day, and also hopefully to mean that we finish a bit early, is the afternoon break that's scheduled. We're not going to do that. So what we'll say is, if you need to pop in and out of the room at all, just do that whenever you need to. Toilet, grab a drink, whatever. The refreshments will be refreshed during the afternoon. But we'll just go straight through to the end. Should mean you'll all get away a little bit earlier. Just need to say to our speakers, I'm going to put the timer on my phone, and the alarm's going to go off after 8 minutes. So there's no hiding if you're running over. So we'll keep it moving. First up, we're going to hear from AnswerPay, who've had a couple of shout-outs today already in the other presentations. Peter, good to have you with us.
Thank you.
And I'll let you take it away.
So thank you first of all to Fintech North, and thank you very much all you Fintech warriors who've managed to be with us today despite the travel disruptions. So yeah, I'm Peter Cornforth, Commercial Director here at AnswerPay, and we're about opening access to financial innovation, and we do that using Request to Pay. Now, we were set up in January 2020, and we've had a series of exciting firsts since then. First one, certified to Pay.UK's Request to Pay scheme. First one's to perform live transactions. We're now integrating into Europe, thanks very much to Department for International Trade Funding. And we've also got first customers on board, the Money Carer Foundation, who are based here in Manchester, being one of the first. Now, the problem we're looking to solve is the invisible payment experience. And this may seem counterintuitive to lots of the conversations we've had today, but it's not ideal for everyone. I think especially in the context where we've got a massive cost of living crisis at the moment, 43% of energy bills, households are going to struggle to pay their energy bills this year. And we know that in times of economic stress, UK Finance tells us that people ditch invisible payments like direct debits in favour of things like cash, card and cheques, those payment methods which give them more control over their finances. Now, the problem with these alternative payments is they tend to be high friction, and they also tend to be more expensive. So you see, for example, that billers may surcharge a card-based payment, a cheque-based payment, rather than the direct debit, because they want to cover their costs and disincentivize the other payment method. Now, the problem with that is those charges, actually, they're penalising the ones who are least able to pay their bills. It's a so-called poverty premium. It's bad news. So to get around this, what we're seeing is growth of something called pay by link. And pay by link is where a biller may send you an SMS or an email, and in that message will be a link which says click on here, it'll take you to a checkout page to process your payments. And everything sounds great. Not when you think about the context of authorised push payment fraud in the UK, which is absolutely rampant. 123% increase in impersonation fraud last year. We've all received that Royal Mail message saying, click here, pay £2.99 and get your parcel delivered. It's bad news. And we've actually seen some markets, Singapore being one of them, have actually outright banned that as a payment method. And finally, and some of the guys have alluded to this is the problem facing the banks. It's perhaps more strategic, but the threat of becoming the dumb pipe. So we've seen this in the telecoms industry, for example, mobile operators effectively becoming dumb pipes where big tech are starting to offer services over the top. The same is happening in the banking industry. Banks are spending a vast amount of money on core infrastructure, a lot of money on regulatory change, but what you're seeing are more nimble fintechs acting as the interface to that banking network. And the problem for a bank is, if you're invisible, actually how do customers value the experience you're providing? So we think we've got the answer in the form of Request to Pay. Now, Request to Pay was launched in the UK in 2020, continental Europe in 2021. It's already at scale in Australia, where you have 60% of SMEs using it. India, 100 million consumers. The US has not one but two schemes, Clearinghouse and FedNow, and some major billers on board, including Verizon. So it's already at scale in a number of markets. And the way it works is that it's a two-way messaging system between payment applications. So if I give you the example of a utility company who wants to send a request for payment out, they would visit their existing corporate bank interface, and that's important. It's not a new integration, it's not a new destination you go to. It's integral to where you'll be doing your payments today. So you go to your corporate banking interface, initiate a request for payment. Now, as a payer, you receive that message in your chosen payment application. So you're not going off to a third-party website randomly. You've chosen where to receive those messages to. Then, of course, you've got your messages, you can manage them and you can pay them. So in terms of how this addresses some of the problems I kind of went through. So first of all, for payers, you've got better bill management. Because you're able to aggregate all of your requests from all of your suppliers in a single central location, you can see who you owe money to, when it's due for, and you can manage those payments in accordance with when you do have money in the account. So it's very empowering. The second aspect of it is that it's a two-way dialogue. So one of the things that's important about Request to Pay is that you can part pay, but you can also ask for a deadline extension. So if you're really struggling, you can actually ask for more time. So 30 days isn't enough, you can ask the biller for more time. Now, some may think that this advantages the payer too much, But actually, for billers, we've heard about it's cash flow's number 2 killer of SMEs rather than number 1, but it's a big killer of SMEs. So actually, having some dialogue about propensity to pay is a good thing. It's and somebody asking you, I need more time, is a trigger event to have a conversation, perhaps about payment plans. And rather than wait till the end of the 30-day periods where it goes into a credit control process, which is usually expensive for a biller and actually a really stressful process for a consumer, there's a sensible dialogue to be had. And the last point is around choosing your payment experience. Because you're choosing which application you want to receive your messages in, you're choosing what experience you want. You're choosing which payment method you want. So from a biller's perspective, you've got an at-scale service which serves the whole market. But from a payer's experience, you've got a very individual, personal experience for you. So you've got scale and you've got personalization in one go. Now, in terms of the security aspect, so no SMS and email. I've mentioned before it's going payment app to payment app. So it's got bank-grade security throughout. You can also choose who you want to get your messages from. Because what you do is when you enroll in the service, you tell the biller where to send the messages to. You give them effectively your payer ID, which routes the messages. So you've already initiated the process. The biller has to send you a pre-authorization message to establish that relationship before they can send you any requests. So what's important about this is that you don't get any unsolicited messages. You kind of set up that relationship in advance of getting any requests for payments. And finally, it is closed loop. So from a biller perspective, they have to be onboarded into the ecosystem. There's a whole KYC and AML process. So any fraudsters should be wheedled out at that point. However, if they do get through the net, because no system's perfect, because it is closed loop, you can kick them off. And it's very hard to join back in again. Again, unlike email and SMS, where you can create another email or SMS account within seconds. Now for the banks, I mean, this is almost the perfect experience. So from a biller perspective, you've got that invisible payment experience. Billers don't want to be bothered about running a payment service. They've got their own products and services to worry about. Banks do want to worry about payment services. So they can very much focus on building that valued experience. Secondly, Request to Pay is more suited to regular payments than one-off payments. So this is really an opportunity to acquire not just a single transaction, but an ongoing series of transactions. So very much build a relationship with the customer rather than that one-off. And the other aspect, which I think is quite an interesting step-off point, we all talk about digital identity a lot in the payments industry, and it's never quite taken off. But I think Request to Pay could be a vehicle for that. If you think you've got that two-way messaging system, it's very easy to envisage a process where a biller asks, are you over 18? And a payer responds via their payment application where they've done their KYC and AML to validate, yes, they are over 18. So you can very easily see it, kind of the stepping stone towards digital identity. Now, linking back to the kind of the main theme of the presentation, how does this all happen? Well, open APIs. I mean, open banking, of course, has opened the doorway for this. 6 million accounts and counting. And I think it's probably going to be 7 million by the time we finish this presentation, but clearly very successful. With open banking, if you bear in mind that on average we've got 2 bank accounts per person in the UK, it's quite interesting, but open finance is perhaps even bigger and better. Part of open finance, which we've heard, is about how other industry sectors, utility companies will open up their...
First one as well, Peter. I'll let you wrap up.
Yeah, it's pretty much the last slide. So open up the APIs. Now, for utility companies, I mean, this is really exciting because so 2 bank accounts per person, regular payments, we have 7 regular bill payments per person in the UK. So there's far more complexity there. To simplify that is going to add a lot of value. And as Answer Pay, we sit in the middle to join the two together to create that Request to Pay experience. Wasn't far off.
Not bad. Well done. Thank you. I mean, obviously we've known each other since you started this, and it's been very interesting watching the evolution and seeing more and more written about Request to Pay, and which is possibly due to some of the people you've introduced me to that I see on LinkedIn now. But where do you see the balance of adoption here across consumers and business users?
Yeah, great question. And it is a two-sided ecosystem, so you need both to take off in unison, otherwise you end up with that chicken and egg problem. We do see more demand from billers at this moment in time because I think actually there's a big cost reduction opportunity for billers. However, interestingly, the first customers we've signed are payer applications, and they're payer applications that focus on the financially vulnerable and financial inclusion sector. So the Money Carer Foundation, helps folks with power of attorney and let them be in the flow of the bill payments. And one bank's financial inclusion, so this is about kind of addressing people where there's no bank branches left in their towns or villages anymore. So we've seen bigger benefit there, if only because I think they can see the increment is that much bigger than for the mass market perhaps. But I think overall biller side, but payer apps are definitely engaging too.
Very good. Does anyone have a question for Peter before we hand over? I mean, I can just see so many applications for this. I was getting chased for nursery fees this week, and it's just if they would just request it direct from my payment, because it's a different amount every month, and they won't do a direct debit, and it's things like that. I just think I could save them hassle chasing me. They could save me hassle from faffing about going to initiate payments.
Yeah, it's same with me. I mean, the council charges me to have a recycling bin for the garden waste, so you can imagine that's the kind of thing you put on there easily. I think it fits in nicely with other payment methods because it is payment method agnostic. Yeah. So you could see, for example, if your nursery fee you're paying off straight away every single time, then actually why wouldn't your app say, well, would you like this to be a VRP? Yeah. And sign you straight up. So I think it plugs in quite neatly with lots of the other payment methods that are out there.
Yeah. Thank you.
Cool.
Great. Thanks, Peter.
Okay. Next in the hot seat, Ikenna from ScribePay. Where is he? There he is. Second time for ScribePay at Fintech North, but your debut.
It is my debut.
Yeah,
Well, let me extend my gratitude to Fintech North, obviously, and the Fintech warriors that braved it out today and made it out today here as well. I'm going to start with an audacious statement and say that everybody here, or most people here at least, who've ever tried to subscribe for a product or a service online has probably had problems with payments associated with that subscription, basically. I mean, certainly that was our experience, which is what drove us to want to build the trusted subscription ecosystem. So when I say us, who are we? My name is Ikenna. I'm the Chief Product Officer for ScribePay. Have a technology background, been in technology pretty much all my life. Worked in technology companies. Of late, my most recent projects have been more around bringing consumer-based products and apps to market, one which is used across the country quite a bit in the health sector. My co-founder and partner is Delphine. She spent her life in banking, specializing in payments, and also has held a lot of senior and strategic positions, mainly around payments. And we're supported by some well-known industry partners and suppliers, and together we bring together ScribePay. So let me come back to that statement I made earlier on about the problem. When you think about a subscription or subscriptions you have or you want to have or subscriptions you've had in the past, three problems come to mind. First of all, visibility. Okay, our research showed that customers think they typically have 2 to 3 subscriptions. They tend to remember the popular ones like the Netflixes, the Disneys, the Spotifys. They tend to forget the less sexy ones like the antivirus subscription on their laptop or the Dropbox and iCloud storage that they signed up to, or online news services, FT, Bloomberg, Economist that they took up an offer on and forgot about quite a few. And so as a result, what tends to happen is that there are a lot of things we're paying for that we don't even know about or we don't particularly want as well. And the reason that is because the cards in your wallet, the accounts you have in your bank are not particularly designed for this type of payments, essentially. So often things get missed, essentially. And as a result, things get missed. And so what we're trying to do is effectively give some visibility around this as well. Okay. The second point I want to make as well is around the substitution traps. Substitution traps is an interesting one. Have you ever subscribed for a service, either taking on a free trial or an introductory period for a particular service, which you forgot to cancel in the end? And the merchant auto-renewed you into perhaps a costly monthly renewal, which you didn't even want in the first place? Well, congratulations, you fell into a subscription trap, essentially. Our research shows that about $1 billion a year is lost on subscriptions or unwanted subscriptions, essentially. And then brings me on to my final point, which is, if you ever tried to cancel that subscription that you didn't want, basically, and gone through the experience of it, and found that the process is just designed to make it difficult, effectively, for you to do so. And that's what we found, that it takes something like 2 or 3 minutes to sign up for a subscription, but cancelling can take forever, essentially. If I want to put a bit of color around this particular issue, probably give you an idea of the scale of the problem, but also give you an idea of the market for something like this. Around 16.8 million users in the UK consume about £12 billion worth of subscriptions a year. That's the UK alone. Remember that 1 billion I mentioned earlier on? That's about 10% of the total amount, which is wasted, basically, due to unwanted subscriptions, essentially. If you scale that out, globally, the market is around 650 billion, and it's projected to grow to 1.5 trillion by 2025. That's how big subscription payments are going to be a part of our lives, essentially. Now, this kind of makes sense, because actually, subscriptions allow consumers to enjoy products and services affordably. And so we want to be part of that subscription economy. We want to enable that subscription ecosystem, essentially. And so that's exactly what our product does in terms of ScribePay. It saves you time. So you can see all your subscriptions in one single place and give you visibility of your commitments straight away. It helps you manage your money, help you manage your money in real time. So the app has approve and decline functionality, authorization decline functionality that can allow you to make decisions on transactions that come through. So think back to that trial that you took on. So you sign up for the trial. As the trial comes to an end, we'll notify you about it. And before the merchant has the ability to then step up the charge for you, we give you an opportunity to have a say in that process. You can decide whether to proceed or not with that particular subscription. And then this then brings me on to my final point as well. Interesting, I was talking with somebody yesterday, and he said to me, actually, I fear, and I hear this a lot from our customers, by the way, I fear subscribing for subscriptions. I fear taking on those new trials and offers because I fear that I'm going to get stuck or forget to cancel, and that'll be it. To us, what we hear is, actually, there's a trade that could have happened between a consumer and merchant that didn't happen because of fear, basically. And so we think that if we can give consumers control, we give them, remove those inhibitions, then a lot more trade will effectively happen. And so with the app, what we're trying to do now as well is actually bring to you a marketplace, call it a trusted ecosystem, if you like, where consumers can try out new products and services without the fear of being trapped or anything of that sort. Currently, you can download the app on Google Play and Apple Store. You can start for free. You can track your subscriptions manually as it starts right now. We'll notify you as they become due for payments. We can also upload as many or create as many subscriptions as you like, all for free. We want to leverage open banking. There's been a lot of talk about embedded finance as well. We want to leverage open banking so we can pull through from your account subscriptions that we think are, and you can manage them within the app. When you're ready and you want more, you can upgrade up to the premium version as well. And with that, we give you a new way of managing your subscriptions. You get a wallet, you get a virtual card as well, but you get controls within the app, which is the main thing. Okay, and then for any subscriptions that you've already set up that you don't actually want, again, you can actually cancel those or stop those payments going to them. So how is ScribePay different from the others, from everybody else? Companies we've seen, even the banks, they do actually give you the ability to manage your subscriptions. But one key point of differentiation is that they tend to come in after the fact, so after the charge has left your account. What we're doing in ScribePay is trying to prevent the charge from leaving your account as well. And anybody who's invested any time trying to recoup that money that's already left your account to this merchant will appreciate that prevention is actually better than cure. Also, keep in mind as well, we do not hate subscriptions. We think they're a good thing, right? Okay. We love it. And if you think about our goal, we're trying to build that subscription economy. We're trying to enable that subscription economy. So what we're saying is that we think you'll be able to subscribe more if you had better controls and you believe you have better controls. And that's essentially what ScribePay is about. So where are we on our journey? Well, we launched in February our beta between March. Between March and May, acquired about 950 users, spending about £10,000 on subscriptions across 150 vendors. Those metrics are key for us. One, the users give us a good understanding of who our customers will be. Don't worry, I'm so close. who our customers will be going forward, which has been really insightful. They tell us how much they spend, and they also tell us the merchants across which they will spend that money on, which is very good when we start to consider our marketplace. And finally, we're currently raising as well. A lot of that money will be used towards to fund the next future development of ScribePay. A lot of that will go through our product development. Some of it will go through us supporting our customers and then acquiring new customers. So for consumers, investors, and also merchants alike, come join us. Thank you.
Very interesting, really interesting. I mean, anyone who's ever tried to cancel an Amazon Prime subscription will be interested in this, I think. Has anyone got a question at all? So let me ask. So obviously the premium model, is that the sort of only route that you have at the moment to revenue? Is there any revenue into you guys through the sort of standard service if people are signing up to that?
Absolutely. So 3 revenue models. The premium model is one route. There's obviously the interchange, but barely noticeable. We won't mention that as well. But finally, as well, one of the things about building the marketplace is that we want to offer the merchants the ability to also advertise subscription-based services on the product. That then generates an extra revenue stream as well. So yes, there'll be other revenue streams.
And Kevin earlier was talking about the sort of prominence of product as a role within payments, and I noticed that 2 of you as the founders, you've got the chief exec and the chief product officer, which is obviously yourself. Was it a conscious decision to use that title rather than say CTO or something different?
Yes, it was. So you're right. Background is in technology, but a lot of the work we do right now, we've outsourced a lot of the development, which is great. It became very apparent from working with tech devs that launching a product really it's not just about the technology itself. Okay, technology is a component of it. There's the processes, there's the operations, there's the support of all of it as well. And so bringing that into one area and owning that gave me greater control and allowed us to realize our achievements better. So some of the things that Kevin mentioned earlier on completely resonated with, which is a good idea to do.
Okay, brilliant. Right, thank you. Good luck.
Good luck. Thank you very much.
I'll take that. Okay, so now we're going to hear from Renata at Gratu. So we first met, as we remembered last night, at the launch of the NatWest Fintech Accelerator in Manchester, didn't we? Some years ago, yeah. So it's great to see that you've moved things on since then.
Thank you.
And,
Hi everyone.
Tell us about the.
Yeah. So peer-to-peer payments. I'm going to start with this amazing statistic that peer-to-peer market size is estimated to reach 7,000 billion by 2030. What an amazing number to aspire to, right? But when it comes to peer-to-peer payments, there is only one criteria that is really that really matters, and that is a perceived risk of peer-to-peer. That is a perceived risk is what matters for someone to engage in peer-to-peer activity. 52%, only 52% of those that are banking online see financial services as secure. Never mind everyone else. We have heard about PayPal fraud recently. We know that social media is a goldmine for people obtaining financial information, personal information. We're talking identity theft. Most of the peer-to-peer transactions at the moment do require exchange of personal information. It doesn't matter if it's a mobile number, a memo in the United States, if it's an email for PayPal, or if you want to set someone up as a receiver on your banking app, you are receiving their data through social media. I often do. So that is the risk. So what do we do? So this is where Gratu comes in. Gratu is near proximity geolocation-based app that allows us to transact without exchanging any personal information. So if you want to download the app now and you want to send me some money, you're more than welcome to do. You'll be able to do so without me giving you my sort code, bank account number, email or mobile phone number. So it is in real time. So money goes directly in a receiver's wallet, because we still have them. It's secure, and it can be anonymous. To download an app, you don't need to register to send someone money. you can do it anonymously, and as I stressed before, no data exchange. So that is our USP. We base the product on near proximity exchange, so that also kind of enables that perceived safety in using the product, because the person is physically nearby. And we know that nearly half of the smartphone users are already engaging in proximity payments. You know, when you tap to pay with your phone in a shop, right? So it's familiar. This is the scope for such solution. We started in tipping, and that's where we're focusing at the moment as well, route to market. But we're talking beauticians, hairdressers who are self-employed. Right? You can pay them full amount. You don't need to just tip them. You can pay for the full treatment. We're talking about a man in the van who helps you to move house or a piano, right? We're talking about a window cleaner who is knocking on the door, right? And at the moment, we barely have any cash anymore, so I always have to turn them away because I said, no, sorry, don't have any cash on me, right? So the scope is endless. We're talking paying back friends, you know, someone gets you a sandwich for lunch, you're sitting next to them in office. Again, there you go, there's a 2-3 quid back for a meal deal. We're talking charitable giving, potentially even homeless. So these are the actually groups that are missing out on cashless economies. So the user journey is very simple. You open an app and you see people in near proximity. I do encourage you to experience tech by using it. So jump on your App Store or Google Play, download it, and in real time, these are our people. So a couple of bartenders that me and Dad signed up yesterday, the revs to Cuba. I can still see them now because they are in a near proximity radius. We do need to tighten it a little bit, but essentially it's a couple of clicks, and John here is receiving money directly in the digital wallet. Why do we target tipping? Because that's where originally Gratu started with QR codes. There is this need of transparency in the market when it comes to tips. It is giving us the social cause, and as we know statistically, customers are more likely to respond to peer-to-peer if there's a social driver attached to it. Plus, one beauty salon that gives me an exposure to dozens of customers per day, right? So it works. Hmrc Compliance, we're seeing more and more businesses dropping tipping altogether because they couldn't be bothered, and it's costly, and it costs more sometimes to process tip than the tip is worth. So that's another driver that businesses are taking on. So our transaction today, so the geolocation app was launched end of July, a couple of weeks before I had my baby girl. So it's been slow, but we're getting that out. So we're working for a number of years. We've been working festivals locally. We have a few bars. These three are joining Gratu tomorrow. We are a number of beauty salons, and so far we have processed nearly 1.5k in tips. We've been covered widely by BBC and other media. So the tipping market, 80 billion a year easily. So, but as I want to stress, it's not just tips, right? The scope for this is immense. That's the number I'm going for. So thank you for your time. If you have any questions about tipping or about peer-to-peer, let me know. Thank you. I'm on time.
You're on time. With over a minute to spare. Well done. Well done. Does anyone have any questions? You were talking about the sort of social element of what you do there a couple of slides ago. Are there any sort of social barriers that stop people from using the app? Because I guess it's a kind of they might feel morally that want to tip, but it's also there's no necessarily imperative to do that, is there? Do you know what I mean then?
With regards to tip, it's voluntary. The thing is, so if you have the driver do it, you do it. If you don't want to tip, that's it. You're gonna find ways how not to tip. It's as simple as that. The problem is that these days, because we're moving towards cashless, there are no alternatives. And if businesses are saying, no, I'm not going to accept tips through car terminals, I'm not going to be liable for it, I'm not going to pay national insurance contributions on top of the tip that you earn, then they're left with nothing. So in a festival case study, they even can't be found with cash on them because it's called theft at work. So if we wouldn't be providing the service, they would literally get nothing, zero. So from beauty salons, we are seeing that we're giving them extra 50% in their secondary, which is secondary earning. But in the United States, that's in most of the in states, it's a primary earning because they get paid $2.13 an hour, something like that.
So does that make your sort of biggest challenge just adoption? Again, people
yeah, absolutely. So we are in a process of scaling the product now, and but early signals from those very few outlets that do use Grid 2 are positive. So people are downloading it, and they are putting through from £1 to £30 transaction. So yeah.
Hello, it's a really really cool idea. And did you say, is there a limit on payments in terms of value?
No, you can tip as much as you want. There would be limits we'd be looking into. Previously, when we did it through QR codes, we had a limit of £50. But at the moment, no. I pay my beautician through Grid 2. I don't just tip. So if it's £50, I put £50 through.
So this could be an alternative to Square or other kind of almost like credit card based.
Absolutely. So sum up, for example, someone comes to fix the bike at your home. They don't need to use secondary hardware anymore because they already have their phones. So potentially, it is not just peer-to-peer. It could be B2C.
Sure. And last quick question: there's no subscription for the user. It's just 3.5% cut. That's how you do it.
Correct. At the moment, because we use Stripe, and there's conversation to be had how we can reduce the costs for payment processing. We do pass the 20 pence to a tipper, but that's just a matter of time until we can make it cheaper. But it's free to download. There's no implementation costs. There's no licensing fees. So it's basically open.
So where are you making money?
3.5%. So we take a transaction fee before we pass on the money to a receiver.
Hands going up all over the place.
It's a really cool idea. So interestingly, when you've got a company signed up, so if you're paying, so would they get all their staff to kind of subscribe and be on the app so you can do it directly, or would you make a tip to the business and they distribute?
No, we distribute. So business, that's where the compliance comes in. So businesses are protected because from Hmrc point of view, there are very clear guidance what they expect proprietors, businesses or employers to do if tip gets handled by employer. So we protect businesses by allowing the transaction to be between customer and the receiver. So we facilitate it. So
Good. Right, last question.
one more.
Yeah, you're doing well.
Tipping, it always gets people going. It's such a passionate.
So I think the chat behind me just covered it in terms, and I may have missed it. So ultimately, whilst it's a B2B product, the end customer could be an Ask Restaurants or Azizi's or someone like that, and ultimately it's their responsibility to get the employee to download the app. Is that how it works?
Yeah.
Okay. So there's a good opportunity for volume, I guess.
Absolutely. When I don't want to bore you with logistics of it. The thing is, in United Kingdom, especially in restaurants, staff pool their tips, or that's most of the time it's the policy.
That's the thing. That's why
Yeah.
it's
Yeah, we do facilitate tip pooling, so we do facilitate one-to-many. However, because we are HMRC registered trunk master, it is our responsibility then to pay tax and to run a payroll at the back of it. And I'm trying to stay away from it, to be honest, because I said before, first of all, I don't agree with tax on tip because it's a voluntary, if you like, donation or gift, call what you want. And sometimes we do see that the cost to process that payroll sometimes is more what the tip is worth. So I'm pursuing one-to-one direct tipping. So that's why we're focusing on beauty segments and bars at the moment.
Well, thank you.
Thank you.
Well done. Good luck. Good luck with your continued success.
Okay, right, next up is Bypass, Matt from Bypass. Where's Matt? Not said hello to you yet today. Hi, Matt.
Hi, I'm Matt from Bypass, and this is the only slide I have today, so you're going to have to watch me rather than read what's on the slide. But I wanted to change it up maybe a little bit and just explain, I suppose, my backstory and how failure brought me to launching Bypass 6 months ago with my co-founder. So at the back end of 2019, I set up my second direct-to-consumer brand. It was a formal shirt subscription service, and the idea was to give, formal shirts on subscription. That's exactly what it says on the tin. I'm not technically, haven't got a technical background, so I was relying on platforms like Shopify and the plugins that worked with Shopify and Magento and WordPress to help me launch this service. And I sat in a dusty, cold warehouse surrounded by shirts for months trying to find a solution that allowed me to offer a flexible membership so the customer could benefit from being a subscriber but keep the control of being able to choose the product on a monthly basis. Sounds really simple, very, very difficult apparently. And there was no tools out there that would plug into Shopify, so we eventually had to build our own platform ourselves. And like I said, I'm not from a technical background, so I had to hire other people in to come and do it. And the results were actually quite surprising. We built a platform, we built a proposition, we put the proposition out there, and within 6 months we'd grown from 0 customers to 3,000 monthly subscribers. And I thought, this is the jackpot, we are onto a winner. 3,000 people paying me £30 a month, it felt pretty good. And then COVID came around, and then no one's wearing shirts anymore, people are working from home, nobody needs a subscription, let alone to shirts. And it all just kind of went a bit Pete-Tong, very slowly and very, very painfully. But what I did know is that we built something that people wanted. Consumers wanted the choice, the flexibility, and the control that we were offering. And they also wanted the subscription side of it, like to be a member of this club. And it really got us thinking, if consumers like this proposition, and at the time, other retailers were messaging us asking to use our platform to power their subscriptions because the tools that they were using were too rigid and limiting. I thought, well, maybe there's something in this. And so we essentially took the tech out of that business, shut the shirt side of it down, RIP, and we built a product around a flexible membership and a recurring revenue system that now works with Shopify and Magento and WordPress. So it kind of solves a problem that I had in the past. And it's very, very timely. So the more we've looked into it, 75% of online stores want to generate recurring revenue. And you can understand why. There's consistent cash flow and quite, community is a big thing with subscriptions as well. People always think about the transaction that goes with subscription, but actually being a part of something is really important to modern consumers. And they just don't have the tools to be able to do it. So if you're not a subscription first brand, i.e. you're not selling razor blades on a 4-week cycle, you can't generate that recurring revenue. And it's really, really difficult. And so we're hopefully unlocking recurring revenue opportunities for those 75% of retailers who want to generate this recurring revenue in the next 3 years. And it works really well for everybody. So essentially how Bypass works is it would integrate with a website, and any brand can now launch a paid monthly membership. So if you're shopping at ASOS, for example, you can pay them whatever they want to list their membership at. So let's call it £10 a month. You pay ASOS £10 a month, and for that membership fee, you get access to all of their products, but for a preferential price. So you're getting a discount essentially on anything that you want to buy in their store. So you're not tied into a single product on subscription. You're not tied into a fixed schedule, and you're not necessarily tied into a fixed price for a single product. So you pay a monthly membership. We give you a exclusive to you members only code to work on their website. You put all the products that you want to buy into checkout, enter this code, bam, job's your uncle. Job's your uncle, Bob's your uncle. But like I said before, a lot of it is about building communities as well. So the more that we've spoken to the retailers that use our product, they want to be able to engage and retain their customers for a lot longer, because churn with subscription businesses is horrendous. Fighting churn is one of a direct-to-consumer business's biggest challenges. And with acquisition costs currently sky high, lifetime values are really, really low, so it doesn't really work for anybody. So we've built tools that allow brands to retain customers for longer. We've built better engagement products within Bypass to help you as a customer, give you more value as to why you should stay around. And yeah, I think what we're doing is we're expanding the kind of growing subscription market and opening these opportunities to people that otherwise wouldn't have these opportunities. And yeah, so that's a little bit about us. We launched 6 months ago, off the back of a very tricky 2021. We built our MVP, launched that in February this year. We've onboarded our first kind of 10 customers into our MVP, and we're still in the phase of learning and iterating and kind of figuring out what they want. But the future's looking bright. So if anyone can help in any kind of way, let me know. I'd be more than happy to chat. And I feel a bit of a fraud being at like a Fintech event, because I don't know if this is Fintech or not. It's kind of like right on the skirts of it, but hey, it works. So yeah, like I said, my name is Matt. My email address is right here, so feel free to get in touch. I would love to connect with some more people.
Thanks, Matt. Great story as well. What were you doing before you first created the shirt subscription?
It was like a direct-to-consumer brand before that. So I had a fashion brand for 5 years, and then those customers weren't buying enough shirts from me, so I kind of went to 300 of them and said, how do I get you to buy more shirts from me? And they helped me really uncover the opportunity in the subscription model, especially around shirts. So I think that's why it probably took off quite well. So I've been more on the direct-to-consumer side of the world, and my co-founder is very technical, so good combination.
Yeah, nice. Does anybody have a question? Who do you really want to talk to? I guess people that want to create subscriptions on their businesses.
Yeah, that's the thing. Anyone that's got an online store, they're a direct-to-consumer brand. They have large collections or multiple SKUs that you think would benefit from someone being a member. It's like, I suppose, the easiest way to describe what we do is like Patreon, OnlyFans, or Costco. No one's ever heard of OnlyFans, obviously. But you're becoming a member of the brand rather than a subscriber of a single product. So yeah, anyone that's got any connections or can help with that, that'd be great as well.
Very good. Cool. Right, so you'll create a subscription. ScribePay's getting rid of them.
Sorted. Yeah. not quite like that. Okay, thank you, Matt. That was great. Okay, now Kieran's here from Card Industry Professionals. Travelled over. We last saw you at our Hull event, which was a bit closer to home for you, wasn't it?
So yeah, I also only have one slide like Matt. So I don't know if it's because we have the same hairstyle or we look similar, but we just went with one slide. So there we go. So I was asked a question the other day, and the question was to do with cars actually, and the question was, if you had to describe your business as one make of car, which would you choose and why? I'd never been asked this question before, so I could have fired back Ferrari or Porsche, maybe Tesla in the fintech space, thinking of the advancements in technology. But for me, the answer was Honda, and here's why. Honda is available to the masses. It's not reserved for the minority like a Ferrari is. It is keeping up with the advancements in technology and bringing that to their latest design, and is reliable. I might be biased, I've had 3 Hondas in a row. And over 8 years, I've never been let down by any of my Hondas. But how do we translate that to card industry professionals, if I skim? There you go. So with card industry professionals, we want to work with as many businesses throughout the UK to process card payments, SME sector, across a range of industries. So far, we've supported just over 4,000 businesses in the UK with payments. And it's important to me that we use partnerships and strategic partnerships to stay up with and keep up with the advancements in payments technology. We work with a number of hardware manufacturers, software developers, acquiring banks, our knowledge and experience of working with SMEs to make sure we can tailor a solution to each business owner that's slightly different, from an MOT garage to a restaurant to a salon. It's not one product fits all. And it's important, the most important for me is reliability. The reason I founded Card Industry Professionals nearly 5 years ago was that we wanted to work with SMEs pre-sale, during the sales process and post-sale, and keep long-term relationships that were reliable. It's something I felt was lacking in the options in the market. So 5 years on, I'm proud to see us rated 5 out of 5 on Trustpilot, and actually we're ranked number 1 in 5 categories in the UK, including card processing service and B2B services. So yeah, for us, what we focus on at CIP and the future of payments, so I'm here today, what we'd like to focus on is supporting SMEs in a switch from analog to digital. And to actually, the salon owner or the florist or the deli, they're the lifeblood of our towns and our villages and local communities. We can all agree that. But what does that mean to them? We believe from our experience they're ready to adopt all these different payment technology and advancements that everybody's been speaking about today. And they just need a little bit of support to make sure that they adopt it, it's seamless, it integrates, we support their staff. And so it's really important for CIP that we stay at the forefront of those advancements in technology. I think we can all agree, we've all heard the saying, knowledge is power. We believe for small businesses and SMEs that data is power. See, with data, Stephen, the coffee shop owner in Newcastle, is able to make quicker, more well-informed, better decisions. The decisions make him as a business owner more effective, which means that the business is more competitive as a coffee shop. If it's more competitive, then he achieves longevity and we achieve a long-term relationship with a merchant. So it's really important. And for Stephen, the challenge isn't that there isn't options out there. The challenge is that he doesn't have time. It's time consuming. It takes up a lot of effort and energy, and there's so many options always evolving in the market that every time he looks on Google, there's a new name or a new product that's come out for coffee shops. And also, if he makes the wrong decision, it can really impact his business. It can disrupt. It can be costly and expensive for him. So we work throughout the UK with people that are on the ground with business owners that can support them, present options, tailor a solution that's ideal for Stephen or the florist shop or the salon owner, to make sure that we help implement it and train staff on it, and we're there as a go-to for the long term and can talk to them about new products and advancements in technology. Quickly, just one other customer that comes to mind today is Sarah, who owns a closed retail store that's been going since 1975. She's the 3rd generation in her family to run the shop and the business, and she knows she needs to modernise. She knows she has to keep up with the competition. She needs to move online. She's taking photos and using Instagram and Facebook like we all do, and trying to generate more visibility for the shop. It's difficult to translate that visibility into sales, so she reached out to a local web developer and asked him to build a web shop for the site. The problem for Sarah is it's then created 2 workloads. They don't talk to each other. The online sales and the in-store sales don't sync. There's double entry, double manual entry of inventory, stock management, what size is in stock, what's been sold today online, in store, and it creates a lot of headaches and friction. So using our partnerships and digital tools with acquirers and hardware manufacturers and software developers, we were able to bring a fully digital POS to her shop. She was able to move and re-platform her web shop to one that's synced automatically lifetime, so that anything sold online was out of stock or vice versa in the store came out of her stock, and it was able to save her a lot of time with bookkeeping as well, because the two revenue streams integrated with accountancy software. So actually, for Sarah, what we were able to achieve with that is 5 hours saved each week in manual admin and reconciliation and headaches and stress. 5 hours is 2 days a month. It's 24 days a year. It's almost a month back per year that Sarah has as an independent business owner to run on marketing, have some downtime with family, put into other areas of business growth. So when I think of CIP and what I want you guys to take away when you think of CIP or see us online or see myself in the future is 3 H's. Human, there is no bot involved in CIP. We don't employ somebody just to respond to live chat feeds with templated answers and not giving you a solution. And we actually have people that have grown up and live and work in your local community and support businesses to implement and advise them on new technology. Health check is like a free health check. There's always new products coming up with our partners, our acquirers, different hardware that's being released every year. And we're able to actually advise our back book and support new merchants with those solutions. And we want it to be hassle-free. That's why we aim for the 5 out of 5 on Trustpilot. We want to make sure it's implemented seamlessly. There's no downtime. You don't miss card payments. You don't disrupt your customer journey. But yeah, hopefully, I'm really proud to be involved with Fintech North. We're based over in Grimsby, our head office, although we work throughout the UK. And if there's people that can connect with us on social media, connect with myself, it's Kieran, it's spelled Irish, C-I-A-R-A-N. Let me know what car you'd have picked to describe your fintech, or which of the H's was your favourite. But yeah, really appreciate your time and for listening to me. Thank you.
The timer literally went off.
Did it?
Thank you.
Look at that. There we go.
Great stuff, Kieran. We talked at the start of the day about how maybe payments is a sector that can thrive and help the economy in a time when when we have a bit more of a downturn. So I guess some of the benefits that you were outlining for business owners there can do that. Some of the benefits you were just giving us for Sarah. Have you seen any upturn in inquiries lately, or has your sales process become a little bit easier as some of these become clearer?
Well, we've always worked on a go-to direct, face-to-face environment, consultant approach. Obviously, that was difficult with COVID, national lockdowns, working more online. So it's quite important that we do have a visibility online and using social media. LinkedIn's a strong network, Facebook's a strong network. But yeah, hopefully what we've seen actually is quite a resurgence in bounce back from COVID and the worries around COVID and what it might mean to businesses, and actually adopting new technology and actually thriving, looking forward, whether it is these, the different payment methods, alternative payment methods, online e-commerce gateways, virtual terminals, as well as physical terminals. We've seen a lot of enthusiasm from SMEs.
Okay, anybody got a question for Kieran? I just want to ask you one more then. You talked about how someone could save a couple of days a month potentially, which is a really impressive stat. What about sort of implementation? What sort of time investment is there for a business owner to get up and running with you?
It depends on the product, but we turn around your standard point of sale, chip and pin, smart POS terminals within the same week. So it's from application to terminal out and actually installed and using it in the same week, through to more of your iPad-based full POS equipment, probably a 2-week cycle from discovery phase to actually being in the business. It depends, but it's a short sales cycle compared to some industries. It's within a week or two.
Very good, impressive, cool. Well, thanks,
Thank you.
Kieran.
Cheers.
Okay, now we are crossing the other side of the north from Grimsby I'm going to Leeds. Adam, calls now.
Hello everyone, good afternoon. I appreciate we're at the witching hour here, so short of getting you all to do star jumps to wake up, I do have one element of audience participation just to kind of see where everyone sits on this. I'm going to talk about Web3 and e-commerce. So just to kind of set the scene, can you raise your hand if you currently own any form of cryptocurrency? Amazing. Okay. All right. Can you raise your hand again if you've ever purchased an NFT? Oh, one. Amazing. And maybe in terms of either of those points, and you can answer honestly because no one can see you because you're all looking at me, do you really know what either of the two things are that you've bought and where they're stored? Okay, he didn't. Right, bold. We're going to fact check that at the end. So I'll get to this. It hopefully makes sense in a moment. So I'm the founder and CEO of Calls9. We're a digital innovation and transformation agency. And what that means is that we're helping businesses launch, scale and build value through technology, which ultimately is launching digital products and services or improving their existing ones. We do this by embedding our teams inside your businesses. So we work sometimes in terms of bringing our own products and services to market, but oftentimes with brands and businesses around the world as well. And as I say, it's typically launching new digital products and services or improving existing ones. And the things I'm going to talk about today really are our experience of building Web3 products and services, why I think it is the future of e-commerce, but also raising some questions and challenges around the issues that we've faced around identity, payments, and where some of those gaps in the market might be as well. So I'm going to start with hopefully an NFT example that feels fairly relatable and close to home. So this is a play-to-earn video game that we're building at the moment for one of our clients. Play-to-earn is a whole new category of entertainment, and it's not going to be restricted to video games in the long term. It's going to actually sort of transcend lots and lots of different sectors. But the idea is that you can interact with the digital economy, you can create and collect characters, and this is all done virtually, and it's done through the exchange of cryptocurrency as well as traditional currency as well to buy in-game tokens. And what you can essentially do, a bit like trading cards, is have these characters compete against each other over time. Now that's probably something that feels hopefully relatively familiar. You've heard about things like this probably in other settings and in the press. What's hopefully different about what we're trying to do is that we are building a true virtual economy here that has an identity and payments component to it. All of the characters that are created inside the game are real NFTs, they have smart contracts attached to them, and as they trade and move around the world, there are royalties that get paid back to our end client, but also the users themselves. And I think that from a payments perspective, that's kind of fascinating. It is completely frictionless and ultimately is opening up a way that you can become a creator through what is essentially an entertainment outlet, but actually over time generate real cash through trading. And I think that that's a use case we see applying to lots of other sectors potentially as well. So essentially what we're doing is digitizing a video game process, building an entire digital economy, linking this to cryptocurrency with a payments mechanism, and enabling people to trade things with each other and other players to get both current income and residual income as well. Taking the example into another context, we're also building a distributed cloud compute platform. So you will be able to download our application, put it on your initially Android smartphone at night whilst it's charging, and we are going to execute cloud compute functions and task workload on your phone, and in return for that compute capacity that you're giving us, we are going to pay you in cryptocurrency. So again, this is an example where if we were using a traditional payments methodology to do that, there would be lots of friction, lots of cost. It would be very, very difficult for us to do that. Crypto and blockchain allows us to completely decentralize the process, significantly reduce the costs involved in running it, and incentivize again a completely distributed workforce to engage in activity that is potentially very beneficial to both humanity. We're actually running charity projects initially on this, so things such as folding at home, solving protein cancer key and lock mechanism theory, as well as eventually hopefully processing financial transactions, fraud prevention, for example, identity checks as well, all on a distributed cloud network. And again, in terms of incentive structures, to run this through a traditional payments mechanism, we think would be very difficult. So we think this is an area where crypto and Web3 have an edge. There are some challenges to it though, and I'll just talk briefly about those challenges now. So other than people not really understanding what it is, which is quite a big challenge, one of the major issues is that to get into this game, you have to have a digital wallet. And this is, in all honesty, a fairly clumsy experience. So we're working at the moment to try and simplify that whole process so that engaging with crypto, engaging with NFTs is as simple as using PayPal or as simple as using your credit or debit card. And this is an area of focus for lots of businesses. Stripe are working on it, Square are working on it as well. But it's something that really needs to be improved. The second point is that buying crypto and NFTs, as I say, with cash and cards is difficult. So you can't walk into a store and effectively use these currencies in a really meaningful way at the moment. That needs to be a barrier that's removed, and I think the tech will get there, but it's certainly not an adoption issue at the moment. And the last point really is about trust. I think I was talking to somebody earlier about this, where I sort of feel like the crypto and blockchain space is, it's where ultimately technology was when the dot-com bubble happened the first time round. There's lots of excitement, there's lots of hype, there will be some projects and some currencies that fail and fall by the wayside, but the underlying technology is solid. And I think in 5 years' time, if I was to ask that question again, everybody would have crypto and everybody would own an NFT, but we've got to get there. So what are the opportunities? You can sell a completely different set of products and services than you currently can at the moment if you've got to think about card processing fees or payment gateways. Using smart contracts, you can embed logic into your products and services that build recurring revenue automatically overnight. And they, once they're pushed to the blockchain, will be there in perpetuity. So the idea of that, businesses contracting with each other differently, not signing the big T's and C's with the lawyers, but actually signing a smart contract and knowing that when certain obligations are met, money passes around and everything's executed automatically is a really interesting concept. As I say, creating ongoing revenue through royalties. We're working on projects at the moment that have a charity component, so when the NFTs are traded, a particular charity will receive 10% or 15%, again, forevermore. I mean, that's an amazing thing to do with virtually no overhead. And then the last thing, which is where I think there's going to be a lot of focus, is about engaging customers. So customers can co-own these products and services with you. They can have a governance input, so they can have cryptocurrency that enables them to vote on your products and services and make it a really, really interactive experience. So I think these things taken together, once you get over some of the conceptual issues and the onboarding issues, for me, point in a long-term direction of saying crypto and Web3 and blockchain are going to become part of virtually everything we do. And where I think it's exciting for the payments industry is there are lots of gaps in the chain that need solving to make that frictionless and a really seamless experience. And we're working on that with our clients and with our partners. So I'm interested in connecting with people who are building Web3 projects or are interested in integrating Web3 into their own products and services, or frankly, just want to know what an NFT really is. I'll happily tell you after the talk. Thank you.
That's great, Adam. I mean, absolutely fascinating. You kind of bringing the metaverse to life for us there. You talk about Web3. Web3, metaverse, interchangeable or not? How do you define the difference between the two things?
Yeah, so I sort of define this slightly differently, I guess, than a lot of people do. For me, Web 1 was accessing information, so looking up information on the internet. Web 2 was social and commerce, so buying products and services and building relationships. Web 3 for me is about identity and experience. Experience is the metaverse element, and identity ultimately is what blockchain really is. Under the hood, it's an identity verification system to say that something has definitely happened, and we know between two people, we know how, when, and what the characteristics of that are. So it definitely includes the metaverse, and we think that digital ownership is completely logical. I mean, I've used a video game example here to be a little bit sort of provocative. If you've been downloading tracks from iTunes or renting things from the App Store, you've been buying digital products and services anyway. This is just an evolution of that to say it's definitely yours and it's definitely unique. Okay. Yeah.
Just think about Ledgerly, for example. There was a conversation this morning around retail banks and whether they'll survive, etc. Are customers ready to be their own banks in terms of they're going to be storing value, storing all this information? Are they ready to be their own banks?
So there are other parts of your life where you already store everything. And I suppose in this world, it's not that you're technically storing it, it's you're trusting a decentralized world to look after it for you. So I think if you describe it in terms of, are they ready to store everything on their own? No, they're not. But they've already voted with their thumb taps that they're ready to try different things. And I think this is why the challenger banks have been so successful. People buy into a vision and a brand, and they buy into a direction, and they feel underserved by traditional banking. So I think they're certainly open to the conversation. I was on a Barclays panel last week, and we were discussing similar things. And the major banks have huge teams looking at this, because I think it does raise the question of why do you need a bank? My personal view is that they underpin, in theory, trust in a system. So I think there'll always be a role for them, and their deep connection to the government and regulation, I think, is useful as well. But I think people are prepared to explore different ways of interacting with financial services. The issue at the moment is that it's very easy to be caught out by scams and by systems and companies that really aren't up to muster. So I think some regulation probably needs to come into the space, but I think you can do that in a decentralized way. And ultimately, this tech, I think, can be as widely applicable as your PayPal account or your Stripe account.
We're good. Right. Thank you, Adam. That was very thought-provoking indeed. Thank you.
Okay, so next up, Fintech North's very own Dan Rajkumar is going to talk to us about Pay Advancer, which is a new, brand new, hot off the press fintech concept.
Thanks very much, Jim.
Okay. So, hi everyone, I'm Dan Rajkumar. I'm the founder of a peer-to-peer lending company called Rebuilding Society, and a spin-off of that was white label crowdfunding, which builds peer-to-peer lending platforms and other equity crowdfunding solutions for businesses that wanted to operate their own model in the same industry. We've got a number of clients around the world, we've got about 10 different customers. And building a crowdfunding solution is actually really sophisticated. There's probably about 40 different integrations with different fintech apps that we've done, from credit rating agencies to payment providers to AML providers, all kinds of different credit scoring systems. And we realized actually that we've got a lot of really good technical skill and capability, and this suite of integrations is probably a bit more sophisticated than there's probably some simple solutions out there that we can release that the market would really like. And so this was a bit of an internal hackathon, and we came up with 3 pretty good ideas. And this one, Pay Advancer, is a really nice one around open banking. What it allows my staff to do is request pay advance very easily using an online form in a way that generates the link that I use to authorize that payment. Has anyone here used open banking to approve a payment that's come through either an email or from a link to purchase something? They're not actually been through the purchase transaction. See the show of hands of anyone that's, and so it's pretty seamless, right? It's very efficient. It goes, if you do it on a mobile phone, it will open in the native app of your bank provider, in my case Barclays. It will present me the transaction that I'm sending to the payee, and it will do the identity verification just using a camera, so it unlocks, and I just press one button to approve the same thing. And as an employer, I've got about 20 different staff that I work with now, and some of them are freelancers, some of them are full-time employees. Every month I'm getting anywhere between 2 or 3 pay advance requests, and I realised that we need a bit of policy around this to make it fair for everyone. With the cost of living going up, we feel that it's a good kind of social impact solution to make this easy and straightforward for the staff to make the request and for us to approve it. And I realised there's already a company doing this. Has anyone heard of WageStream? Yeah, so WageStream is pretty good service. does something really similar, but they instead of using, they integrate with modular, and they use this concept of a float, essentially, where the company puts money into a balance, and the employees can draw down from that balance, and then once it's gone, it gets topped up again the next month. But there's a couple of things about it that I didn't like. And there's a couple of restrictions. You can't have a pay advance from which you would have several deductions from your pay. So, for example, if an employee wanted £1,000 deducted at £100 over 10 months, you can't do that with wage. So we went away, we created this app, and we used a Manchester-based fintech to help develop it, called Nevo. We've been working with Nevo for a few years now, because they provide a secure channel for communication, basically. It's like a WhatsApp, but for regulated financial services businesses. I can't recommend those guys enough. They do a really good job. And so this helps to mitigate the phishing risk, which does exist as soon as you're dealing with any kind of payments over email and kind of transactions. Email's a bit too insecure for that, and so we kind of use the emails for the notifications, but try to direct people into the Nevo ecosystem for actually approving the transaction. And it works really, really well. And I can now approve these advances without really needing to give too much thought to them. I don't need to. And when I approve it, it will send a notification to the payroll processor. At the moment, that's just an email notification, but the person who does the payroll knows to set up the appropriate deductions. One bit that I would like to do is the integration with the payroll solutions, like Xero and the different accounting systems, but that won't take long to develop. What I'm really looking for today is to try and get some test users to help me launch this, bring it to market. I'm doing it really as a part of a social impact agenda, to a bit of a PR tool and a bit of a way of supporting our CSR strategy and achieve some of our ESG objectives, and basically just to encourage companies to give pay advances when the staff need it. When that boiler breaks and a member of staff needs an extra £300, we just want to make it really easy and straightforward for them to use. So we've got our strategies to try and make it to give the link to the employees for them to talk about it and to make the request of their employer by using the service. I'll be kind of sending around a demo fairly soon. I bought the domain payadvancer.uk, and the model will probably be a subscription, I suspect. But we're looking just to take a fraction of the interest that the employee would pay, which would in most cases be zero. But I think once the employee has used the service 3 or 4 or 5 times, then they might start paying interest on balances that they're advancing from their employer. So that's the concept, that's the idea. Very much appreciate any assistance with getting it out there, promoting it to companies.
Thank you, Dan. Really clear concept.
Thank you. Anybody want to ask any questions, or has anyone got any feedback for Dan? Because this is kind of pretty new, so he's looking for that feedback. I don't want to put you on the spot, Greg, but I was wondering whether, a question for Dan, maybe for Greg as well. Where's the balance for when you offer a service like this with sort of vulnerable customers? Does the employer end up with a responsibility for identifying vulnerability? Like if somebody did just keep continually requesting.
Yeah, so it's a good question. I think we were discussing it last night, and I think if somebody's continuously requesting pay advances, you might have to check, are they getting paid enough, right? Is a pay rise not really warranted in this situation? But the truth is, one of my best paid staff members is, has a more expensive standard of living, and so it's more a case of a financial discipline than a vulnerability in that situation. It's not a regulated service because it's not giving credit, so it's not the emphasis on supporting vulnerable customers is really for regulated credit providers. Our argument is that we're an alternative to high-cost short-term credit providers. So actually, we're trying to encourage people to go to their employer before taking credit, or even before using a BNPL service.
Yeah, I mean, so the service they're discussing at the moment isn't really regulated. In fact, the FCA, not the FCA, sorry, don't lies, HM Treasury recently within their consultation response kind of clarified that they weren't expecting to regulate this type of payment. I don't think that they had really considered people charging interest on those payments, so that's probably worth an exploration on where that pulls you into, whether that does pull you into regulation, because that might put you into the Section 60C, the Section 60C exclusion within FSMA. But yeah, I mean, explicitly speaking, there's no obligation here on searching for vulnerable customers. That being said, there's obviously a principal point here where you want to be identifying those people that are continuously drawing down. Why are they doing that? Obviously, the risk here is lower. This isn't the payday loan back in those days where mortgages now defunct, effectively predatory loans. That's not what this is. It's a far more equitable solution. So the risk is certainly lower, but absolutely, principally, there's potentially an expectation there.
So isn't there another way of looking at this, which is it's not a credit, because if you look at it's linked to it's earned wage access.
Yeah.
So exactly. If you treat it that, then you're not actually providing a loan or credit facility. It's somebody claiming to get what they've earned up to that date, right? So this is moving away from payday loans. And in a number of European countries, that's now becoming a regulation that employees should be able to actually get access to their earned wages up to the day. So I could work a shift today, end of the day I can say I want payment now, not wait till the end of the week. So I think if you just look at it from that perspective, then you're moving away from that whole credit and lending facility out of regulation, but actually still meeting the regulations around earned wage access. And that's where the employers fund that account.
It's a really good observation. I think there's a lot of payment providers that are helping to facilitate that more frequent payments. Go on then.
I would like to session. I'm just wondering, what do you think the response would be? I always feel like as a business I might need invoicing that as well to make sure you're getting paid. Obviously, by your customers upstream of it. So how do you imagine it being in terms of, I guess, pressure on employers, right, to pay out? Because obviously, it depends on the business. There could be cash flow delay.
Absolutely, yes. And so this is a large part of the reason I wanted to try and create a bit of a policy and process around it. Is because at the moment, it's become a bit of an expectation from a group of people who had been, asking for pay advances. Over time, I've never declined one basically, and so the expectation setting that any time there's a request that's made, it will get processed. And you're right, it does. Sometimes there are some cash flow considerations. And a large part of the reason I wanted to make it a policy is that whilst it's a small manageable group at the moment, really it's a benefit and should be available to everyone on a fair use terms basis. And that's why I feel that I need a bit of an app to help administer it.
Yeah, I think conceptually it's great. So,
cool. Thanks very much. I'll look forward to promoting it and appreciate any feedback and anyone else. Thank you.
Nice one, Dan. Okay, very good. A new fintech launched at Fintech North. That's what we like. Cool. Mark, next up. Great to have you with us. Tell us all about Bex.
Thanks for having me, Fintech North. I'm Mark Sherman, as it says here, co-founder of Bex. I'm going to talk to you about my thinking around financial inclusion. The reason I'm here is it's a pretty big topic. I quite like a bit of assistance in terms of figuring it out. So anyone that wants to shout out during the presentation, heckle me, feel free to do so, or grab me afterwards and we'll have a chat. Try to summarise it in 3 main points. So access, and then kind of education or usability, utility, and then protection. So that's what I'm going to try and cover off when we get through this. Happy Pride Month, everybody. It's been a good month for the LGBTQA+ community. I did a lot of research and Googling, don't check my web browser, on sexual inclusion during lockdown. I was trying to figure out why it was becoming such a prominent part of society, and why there was this kind of media storm, and it was everywhere you looked, right? And it dawned on me in researching it that a lot of it was to do with the fact that there was now a place called the internet and a forum called Google, that the next generation could go and ask all those complicated questions that were kind of private to them, that they wanted to figure out the answers to. And that complexity and that lack of knowledge in schools and through parents and through friends, or that taboo type of subject matter, meant that they weren't able to figure out which direction they were going to go in. But with the advent of mobile phones, TikTok, YouTube, answering those questions for them, they had their own private little forum, and I had my own private little forum during lockdown to do that research. I then translated that into financial inclusion from sexual inclusion, and this is me looking at the world of personal finance. In corporate finance, I was pretty well accustomed to what was going on. So I qualified as an accountant, I moved into structured products at an investment bank. I set up a hedge fund called Muzinich in the UK, which was a US liquid manager, and we established an illiquid private capital strategy for growth capital investments. And then I moved into venture capital. And I was still stood like this, trying to figure out if my pension was allocated with the right distribution for multi-assets, or what annuities I should be picking up at the end of it, whether I should be buying Bitcoin or NFTs, should I be diversifying my asset allocation of my current savings vehicles? What did my pay slip actually mean? Was I on the right tax code? And this is me before I had 4 kids, so that's why I got black hair, and obviously now I've got grey hair. And I started thinking about their future and what their future is going to look like in terms of that complexity and trying to untangle that jargon that is the financial illiteracy that we currently bestow on the next generation. I didn't want them to Google money or finance and come up with 20 billion responses. Yeah? Financial inclusion, interestingly, only comes up with 800 million. But within less than a second, you've got 20 billion responses, most of which are marketing products to you. Okay? When you think about banking the unbanked, that's what most people come to think about when they're thinking about financial inclusion. It's about giving people who are outside of the financial system, the international monetary system, access to that huge machinery. And it's a really good way to look at it, and I advocate how it's being done, but you're concentrating the power of that financial system into a handheld device. Okay? You wouldn't put someone that didn't know how to drive in a high-powered vehicle and just go, there you go, here's the keys, off you go. Yeah, it's just reckless, and it's going to cause a crash at some stage. So it's so complex, this system. Credit markets, derivatives, equities, bonds, commodities, inflation, money supply, macro events that affect all of that. You can go on and on and on. I won't bore you with it, believe me, I could. How did I bring that back to where's the start point on navigating this enormous journey? So I thought, well, what we're talking about in the UK, how are we getting on with things here? We're talking about rural communities that don't have access to banking. Yeah, let's solve that by letting them go to the post office and deposit money there. We're talking about high street banks in towns and city centres that don't have access for people on weekends or on evenings when they've actually finished work and want to do their banking, or they're just not there anymore at all, right, because they're closing or turning into Starbucks and coffee shops. I think that where we're heading is going to change. Yeah, everything you've heard today is all about change. The biggest sign for me was my local shop in the town that I live in. I walked in to just buy a drink or whatever it was, and it said, "We do not accept cash." Yeah, this is a retailer that's telling me I don't take cash. So if cash is disappearing and we're going digital, it's kind of like either educate yourself and empower yourself on that journey, or you're going to have to escape it. But you can't just ignore that change that's happening. We're already seeing change happen in high street banks. I don't know if anyone remembers doing this, queuing up at bank tellers. But the machines are taking over, automation is taking over, computing power is taking over, and the direction of travel has already been set. So it's quite difficult to swim against that tide. Yeah? What we now know as automated finance, and I think, Peter, you mentioned, are people ready yet for this inclusion? Here's where I think it'll go. And it was really good to listen to your presentation, because I think my kids will be invited to Lionel Messi's new Nike football boot unveiling at the Paris Saint-Germain Stadium, the Stade de France, in the metaverse. They'll be able to attend with their friends. Okay, there's a $186,000 Air Force One that was sold this year, okay, before the crypto bubble burst. But these things cost a lot of money in the digital world that the next generation will operate in. How do they go and get the football boots that all their friends are going to wear, and probably get a real copy to wear on their Sunday morning and Sunday league football, without someone outside the stadium in an unregulated environment offering them a loan, a flash loan, or a way to invest in yield farming to generate the money, or a way to game the system and earn credit through NFT purchases or incentivize gaming purchases? It's a really, really difficult world to wrap your head around, but it's coming, I think, in the next 5 to 10 years, it'll be there. It comes back again to the control around how you establish these financial products all within the palm of your hand, all without the safety features that go with it. If you go back to the car analogy, you know, we've got autonomous vehicles, but we've also got sat-nav, and we've got seat belts, and we've got airbags, and we've got crash detection, and all those things that go with that. There isn't that yet wrapped around the world of mobile banking. It could lead to an explosion in debt. We've already got an explosion in debt. This is one of the charts that I used to look at all day long. This is the increase in global debt, okay? And that is 2020, so at the start of the pandemic, believe me, it goes up exponentially. And that's a good thing, right? Credit, as the word credit comes from, is about belief and trust. So there is a good way to handle debt, but there is also a concern that if you don't handle it properly, it could lead to tearing society apart, okay, as inequality increases. And there is a statistic that I'm going to try and get right. 1.1% of the global population own nearly 50% of the world's wealth. That's today. Okay, and if you think that's frightening, the flip to that, at the other end of the distribution curve, is that 55% of the global population own 1.3% of the world's wealth. So as that polarization continues to transfer across societies, there's a risk for more inequality, more exclusion, and less of a balance. So how do you wrap all of that up and start trying to affect change, which is what I decided to do in the middle of lockdown. I decided to leave the world of finance and try and tackle this issue, and I realised that the best place to start on this global problem was with the next generation. So I set up a company called BEX. What does BEX do? It puts all of that educational content, all of that theoretical knowledge that isn't transferred in the academic syllabus or often by parents or friends or peers, into the interface that most children, and largely the next generation, will use their mobile phone. So we have a mission to educate, to include, and we have a mission to save, to empower, and I'll come on and explain a little bit about that in a second. It's not just about digitising cash to paper notes to plastic cards to mobile phones. That technology piece is actually quite easy. What's also relatively easy, actually educating them. Yeah, if you get finfluencers, as they're now called, these are digital influencers that focus on finance to talk to the kids. They listen. They're not embarrassed to listen to learn about money because they're doing it in the privacy of their own home, probably sat on the toilet watching TikTok videos or wherever the kids consume this information. But there is quite a lot of information to get through, and there is a structured process for us to do that. And crucially, you have to teach them the theory while giving them the practical application to go and try it out in a secure environment that has parental oversight, and parental controls, and parental visibility, etc. You don't teach a kid how to catch a ball by teaching them the theory in a classroom. Same about riding a bike, so why should we do it in finance? This is the boost we want to give them. So there's a boost of $9 billion pounds sat in accounts for under 18. Quick show of hands, anyone got kids between the age of 11 and 18? Yeah, okay. They've got some of this money. Most people don't know they've got it. The society that I talked about before, that 1.3% of wealth concentrated at 55% of the global population, are most of the people sat in this bucket. It's called a Child Trust Fund. It was introduced by the Labour government back in 2001, I think. And we have developed a way to connect our customers, our kid customers, with this pot of money, and crucially, make sure it's invested in their ESG mandate. And we've partnered with the world's largest asset managers to do this. At BlackRock have got a dedicated mandate for us in ESG to manage this money. We think that if it's deployed correctly, if children understand how to invest, how to save, and they're given a bit of a boost, the average account balance is about £1,500. That's before you've contributed to it, but you can contribute £9,000 a year for those that can afford that. There's going to be a win-win here. There's going to be an incentivization to not move away from credit, but move towards a savings habit that we think is really important. So we're trying to get this inclusion going to make sure that we've got a society that feels included, that doesn't feel striated across to the extremes, that feels that they have a community approach where money isn't a taboo subject, where they can ask the right questions, where they can learn the right answers in an app and amongst their friends and amongst their community. We call it real life money skills, and it's hopefully something that we'll be able to develop for the future. We launched our app in the App Store this month, so it's brand new, hot off the press. Any questions, feel free to contact me or shout out now. Thank you.
Thanks, Mark. And very obviously a mini keynote at the start there before you did your pitch, so that was really interesting to listen.
I thought that's what you asked me to do. I didn't
Yeah.
realise it was a pitch session.
It was
a
really
different pitch deck if you wanted to do.
It was really good. It was really good. Thank you. I mean, well, the Child Trust Funds thing. So obviously, a lot of people are going to be in that bracket. How do you check if your kids have got Child Trust Funds? How do you find that out?
At the moment, if you don't download the Bex app and enter your details, and we'll tell you, you go on the government gateway. You set up a government gateway ID if you haven't already got one, which is pretty much the first hurdle that most people fall at. You then navigate through the Hmrc website to find the part which says Child Trust Fund location, and then you think, oh great, I'm here, and just enter my details and that's it. They then send you in the post, about 3 weeks after you submit your request, a letter that says it's with Chorley Building Society, it's with Shropshire Credit Union, and then you've got to call them and navigate their process and figure out how do you do it, and they won't speak to you because you're not their registered account holder. Often the child is. So it's a pretty sticky, arduous process, and that's one of the reasons why we try to simplify that, digitise that, and make it accessible.
I think it's a really, really cool idea, and I just wondered, is there scope for, so I have a 2-year-old, so we're some way off this, yeah, but he already thinks he's smarter than me. So is there a way of sort of almost like encouraging kids once they get to a level of understanding and knowledge to become the ambassadors of that to their peer group? Because I kind of feel like that would be an interesting thing, the YouTube channel of the 14-year-old who's sharing their financial wisdom and so on, as opposed to something else. I just wonder if that's something to consider or whether it's on the roadmap.
Yeah, it's a great point, and so we have an ambassador program, and we have 6 ambassadors at the moment. Bear in mind we only launched this month. We want to grow that. There's kind of tiering within that, so gold, silver, bronze status. They get rewarded with different things: stickers, hoodies, water bottles, all sorts. And it depends on what they contribute to the community. So what we're trying to do is get them to share that knowledge that we talked about. So those that are educating themselves, how do they teach their peer group and contribute knowledge back into the platform? So you can post your own tips and tricks to the app. We obviously have a verification process, and then if there's no swear words or stupid things in it, it goes into the app. So it's user-generated content that's sharing tips and tricks within the application itself. And to your point about your 2-year-old, so I've got a 4-year-old, and I think she'll be able to log into a MetaMask wallet or some sort of NFT portal way easier than I can, because she can unlock the iPad and get onto YouTube and everything. She can't read yet, right? So they're digitally native, and they just know how this works, and they will just move through the gears without understanding that they're generating speed and velocity along the way. and not knowing how the brake works, right? Or the steering wheel works, good to go back to my car analogy, and that's the concern that I had a couple of years ago.
Stefan, thank you.
Thanks very much.
Okay, for those of you that have kind of got 5:15 marks in your diaries as the close time, we've only got a couple more speakers to go, so 20 minutes time we'll be done. So the drinks and everything, you've got a bit more time back in your day. But now we've got Jenny from DIT who's going to say a few words. Thank you.
Hi, I'm Jenny Mooney. I'm here with the Department for International Trade. So we're not a fintech, but we're here to try and get in front of fintechs. I don't have any slides because Fintech North kindly just offered me an opportunity to just stand up for a few minutes and say hello. So once again, Jenny Mooney with the Department for International Trade. For those that don't know, we are a government department and our whole remit is to help UK companies export and expand their exports overseas. I'm the tech lead for the Northwest region, so I lead on the technology sector and fintech comes under that. And essentially what I want to do is get in touch with more technology companies and more fintech companies and help you access our support to help you get to overseas markets and sell your products and services. So my role is an international trade advisor in the Northwest team. So I work with businesses on a one-to-one basis, offer advice and guidance on export. We have all sorts of activities, events, funding. It was great to hear the shout out from Access Pay earlier on. We're also supported by a network of international teams. So we have, I think it's around 175 offices around the world. So it's DIT staff based in the embassies and high commissions around the world. And that's for UK companies to speak to those teams. Most major markets have a tech team or a financial and professional services team, which includes fintech. So they know the local market landscape, they know the competitor landscape, you can talk to them about your product and your offering and maybe what the fit would be. Can they help identify some opportunities for you, some partners for you, some clients for you? We do all sorts of trade missions and events. There's funding opportunities that companies can apply for. So with Fintech North, we're working on an Australia fintech mission, going physically out to Australia in September, going to Intersect in Melbourne. So I think that's one of the kind of big fintech APAC trade events. So the opportunity to kind of showcase and exhibit at Intersect North with the DIT teams, and there'll be a group of about kind of 10 northern fintech companies and maybe a wider group of kind of 15 UK fintech companies. And then there'll also be like market briefings on the Australian fintech landscape, pitching sessions with Australian companies. And then that's replicated in different markets around the world. So I think in the next month or so, we've got virtual US pitching sessions. So just to give you an example of kind of type of support that's out there, come and find us, come and talk to us. Let's see kind of how we can help you. So I don't have any of my contact details up here. So it's Jenny Mooney. Find me on LinkedIn. It's Jenny with a Y, Mooney, Mooney. Just having a look at it at the front there. Or just search DIT contact offices on the web and you'll find our kind of local teams. But we're keen to work with businesses. I think there's too many businesses out there that don't know about us. So come and talk to us and see what we can do. Thanks. And thanks for the opportunity.
Cool. Thank you, Jenny.
Thanks a lot. Great to sneak you in there. And I guess we can just only endorse the help that you can get from DIT. We've seen how useful that is for UK companies trying to explore overseas market, but also for international companies that want to come to the UK. So yeah, thank you very much, Jenny. Right. So just a couple of people to hear from now. We've got Alex from Rift. You've put a suit on as you promised you would do. Thank you very much. There you go. And
Thank you.
You've only got one slide, haven't you?
I've only got one slide.
Yeah.
I haven't
Cool.
prepared much. Firstly, my first Fintech North event, so thank you for having me, and Joe and Julian for the invite. Secondly, I'd like to say some really, really great pitches that I've seen. Mark, I thought yours was excellent. Renita, I thought yours was really good. Bypass, Matt, I thought was really good as well. Ikenna as well, I don't know if he's still here, he's probably left now, but that was a very, very good pitch as well. And I thought I'd just kick off the presentation really quickly with a success story and a failure as well, and just to give you a bit of a background on myself. I started, I was an entrepreneur 3.5 years ago now. We used to work for the Hmrc Group, which is obviously an amazing retailer based in the Northwest. I was in their incubator team, working with product, dev, project management, etc., etc. We launched, 3.5 years ago, we launched an app called Butler, B-U-T-L-R, which some of you may have on your phone. We had about 400,000 users in Manchester at one point. We launched that in 2019. The concept of the app was, it was a QR code. You could sit down at a table in any restaurant, scan a QR code, take you to either a web page or an app, and then pay for your food and drink, have it brought to you. 2019, I'll be honest, it was, going from employee to startup founder was very difficult, very difficult. The market was tough, particularly in 2019. Going to a bar that's been operating for 20 years and saying, change your complete operation, stick these QR codes in there, is, let me tell you, it's tough. And hospitality in general is slow to adopt technology, as some of you guys have alluded to. 2020, obviously COVID restrictions, lockdown, that was a complete game changer for the business. It was everything was pay at table, everyone sat down, social distancing. This type of technology rocketed, boomed, absolutely boomed. We came out of lockdown with, in March 2020, we went into lockdown with about 20 venues, came out with about 100, and we were onboarding about 60 venues a month until the restrictions lifted. Probably peaked around June 2021 when we had about 500 venues live, and we just raised a fairly chunky round of investment. As many of you know, on July the 19th, restrictions lifted. There were no more restrictions, there was no more social distancing, no more pay at table, and we went from about 500 venues to about 100 in a space of 3 weeks. It was savage. One of the reasons we did so well, one of the reasons we did so well during that period was we were offering our venues a flat rate on their fees. We were offering cheap next day payments, and we built our own infrastructure, our own payment infrastructure, which basically meant that we could split payments between our app. So we took a £10 order, round drinks on the app, and we could split it quickly between our app and the venue. We built all this banking infrastructure, and effectively we'd done that because 12 months ago when we started to scale, we were on Stripe. When we started to scale, we realised that having 500 venues on Stripe, Stripe with 500 accounts via Stripe Connect was going to cost us an absolute fortune. So we looked at alternatives, and to be frank, there wasn't that many alternatives that catered for marketplaces. And obviously we were a marketplace, we were handling other people's money, we had an app that had 500 venues on it. When we went down that route of exploration, there was only a few providers that could offer this service. We went to the biggest acquirers in the UK and worldwide, and effectively we were turned away at every turn. So we knew that this was a market, that we knew this was an exciting market, and it really took for Butler to not fail, fail's not the right word, but to struggle post-restrictions for us to really dive into it. So last year we sold Butler, so we were acquired, the Butler was acquired by one of its competitors, and we went all in on Rift. And Rift is effectively a marketplace payment solution. And our go-to-market strategy has been pretty simple. We've gone to acquirers, banking acquirers that are somewhat behind the times with our tech, and said, right now, if marketplace comes to you and asks, inbounds you and says, we're interested in working with you guys, they look at the tech and they said, this won't work for us, and they go and work with Stripe Connect. We went to those acquirers and we said, look at our tech, do your AML checks, do your KYB checks, let us be your marketplace solution. And we launched a year ago. Delighted to say that we've got some outstanding strategic partnerships now that are, providing more and more marketplaces now. So we've just hit a small milestone in terms of having 40 marketplaces on the platform, as well as raising a significant seed round 2 months ago. So it's my first FinTech event. I've kind of obviously not come from a FinTech background. It's been obviously a really interesting event, listening to some of the new businesses that have popping up, and it feels like it's exciting, particularly in Manchester as well. That's what's all going on. In terms of me and what I'm after from the FinTech North event, obviously PR is nice, but finding strategic partnerships, finding businesses like yourself, Renato, Ikenna, wherever he's gone, marketplaces that are growing fast, marketplaces that are looking to leverage better rates, better pricing, more customer service. We have got strategic partnerships in this space. If anyone would like to speak to me after, obviously more than happy to speak to you guys there. My email is not there, but I will. I'm on LinkedIn if you type my name in. And is there anything else? No, that's it. I'm all good. That's me done. Any questions?
Thanks, Alex. Anybody got any questions for Alex? So, based out of Manchester?
Based out of Manchester.
Yeah, where are you basing yourself here?
The Exchange.
Okay.
So we're on the Exchange program with Matt and Mark.
Yeah, it's good. So you've got a good network here. We chatted about that a bit last night.
Indeed.
If you came back this time next year, what would you want to be saying? What would your story be at that point?
It's a good question. Commercially?
Well, commercially or progress? Yeah.
I'd like to be in a position where not yet. I'd like to be in a position where we've kicked off Series A. Significantly kicked off Series A.
Okay, great. And so, what could everyone do to help? What's your sort of ask of the audience? And bearing in mind, recording, you say you can reach a few more people afterwards as well.
Well, I've got a couple of emails from yesterday, so Renato, I think I'm going to email you when I get back to my desk. But any merchants that are looking to effectively improve their customer experience in terms of working as a marketplace, save significant fees on payments in general, that would be ideal.
Okay, good stuff. Right, thank you. Good luck.
Okay, right, last but by no means least, we've got Joe from Collective. Collective's been a very regular contributor to FinTech North over recent years, but not you, Joe. So good to have you here.
No.
Good to meet you.
Yeah, absolutely brand new to it. So
you're the last one. So you're closing the show.
I think it was a graveyard shift. I think Joe described it as. I will take that. That's fine. But yeah, it's great to be here in front of everyone. I'll give a quick introduction to myself. So I'm Joe Robotham. I'm the partnerships manager for Collective. For those of us who don't know us in the room, essentially what we are is a group payments platform. In the most basic essence, we help companies, well, more kind of on the consumer side, we help people come together to collect money to go and do the things that they enjoy. Launched back in 2019 via a mobile app. There is also a business integration as well. So any kind of merchants, we can offer a checkout facility to split payment on there. Now, you're probably thinking, do we need another payments app? You know, Monzo allows us to split a bill now. We've all got banking apps, but the numbers here, they do kind of speak for themselves amongst our users. So 260,000 users, 450,000 transactions, over £12 million in payments processed, and the reach there is pretty incredible. Our users like what we do, which is obviously always great to see. Launch date, as you can see, 6 months before a pandemic. So as a company who's tried to bring groups together, for groups to be made illegal, that was a big kick in the teeth. You know, we all had our obstacles, our hurdles, but yeah, that was a pretty big one for Collective as a company. I wasn't actually there. Apparently they called it the Summer of Doom, if Amy sees this back. But yeah, for these numbers, especially in the last 12 months, the growth has been pretty insane. You know, it's pretty epic, and we are very, very proud of this. Now, just want to do a kind of quick test of the room here. So if anyone has organised any kind of group gifting, you know, whether it's a landmark birthday, colleague leaving, just stick a hand up for us. Cool. And keep it up if you organise any events, whether it's a hen do, stag do, gig, football, rugby. Amazing. Now here's what I really want to know. Of all the people who had the hand up there, keep it up if you were left out of pocket or extremely frustrated chasing people up. Cool. So the people with the hands up there were looking around judging those who weren't. I promise you, they were judging you. It's exactly what we aim to solve, you know, and it's the old kind of taxi analogy. If I jump in a taxi to the Northern Quarter on a Friday, I'll pay for that taxi. I'll look around and I'll say, I'll get you a drink inside. If I cashed in all those beers, I would never have to buy another pint in my life, I promise you. It's crazy. But people aren't bad, you know, people aren't inherently bad. No one goes, oh, I really want to put Joe out of pocket and make him waste more time and effort. If you introduce any kind of friction to a contribution, people will go, yeah, I'll pay that later, and it doesn't happen. And we really focus on groups and groups alone, particularly the organisers amongst them. But if you think of that taxi driver, the taxi driver isn't bothered how that payment's split after. You know, you could pay with cash inside to each other, it might be a bank transfer, you might offer to wash your mate's dishes for a week. He doesn't care. As long as they get their payment, it's nothing. And that's a reflection of kind of e-commerce as a whole. You know, you see that final transaction with the merchant. What you don't see is all the time and effort before that. People collecting money, planning, researching, and there's huge opportunity being missed. You know, there really is across the board, and obviously a lot of merchants out there will check kind of bounce rates at checkout. You know, they'll want to make sure they're on top of it, especially the high ticket products that are being sold. But how much is not moving from that idea stage? You know, people in group chat, should we do this? Actually, you know, I'm the organiser, it's always going to be me who does it. No, I don't think I'll press ahead with that. So there is a huge amount being missed out there. Now, what makes us different? You know, there are solutions out there which do help groups. You know, I think, does everyone know Splitwise? Yeah? Splitwise is a great tool. You know, if I'm going on holiday and there's accommodation, there's travel, there's food, drink, Splitwise is great for that. But what Splitwise doesn't allow you to do is move that fund. Okay, I know how much I'm being owed, but I'm still not close to getting it. So that's a real source of frustration. What Collective allows you to do is send a link out to the contributors, you know, simple link, QR code, drop that into a WhatsApp chat, Slack, Teams, whatever you're using, and it's a really simple, straightforward way to get that money back. Now for us, like I say, we focus on the group. You know, what we focus on mainly is removing that friction. So for the organisers, what they get is they get their money up front, they create the pot, they distribute that to their friends. Once they've sent that out, you know, there's a huge level of payment psychology that comes into it. You know, it's how much can I chase? You know, I'm owed a couple of quid. Do I chase a couple of quid? It's not a fiver. What do I do? There's all these questions that we're learning more of as we reach out to our users. So for us, we allow the users to get the money up front. What that means, once they've got their pot with a budget allocated, they know they can go and make a considered purchase with their merchant to say, I've got £100, here's what I want, great, it's sorted, and it doesn't leave them out of pocket. But the main way that we do remove the friction is making that contributor, make it easy for them, okay? If you send me a text with your bank details and I'll look at it and I might come back to it in an hour, I might come back to it in a week, and I am guilty of that quite a lot, my friends hate me, but it's just because there's something to do. You know, with the Collective platform, there's no app download for contributors, there's no banking necessary, no account. It's a 5-second job. If you've got Google or Apple Pay set up, it is so simple to pay. And you remove that friction. One kind of real bugbear we found for organisers as well, any kind of group purchase, is payments drip feed themselves into their personal banking over days, over weeks, over months, and there's nothing more frustrating when you're trying to reconcile that. And if you are an organiser, you know, you've probably got a spreadsheet on the go, probably got pen and paper, noting who's paid, who hasn't. For these to win in dribs and drabs amongst your Tesco meal deals and, you know, beers on the weekend, it's so frustrating. So we're trying to move away from that. Now, in terms of virality of the product, every organiser that we bring, sorry, I've jumped one ahead too quick there, but every organiser we bring brings us 10 new contributors, 10 unique new contributors. That's done within an average of 14 days, and amongst those 10 contributors, we end up with one new organiser. So the inherent virality of the product is just incredible. Going back to an earlier slide, we've only paid £6,000 in marketing, in any kind of paid ads, paid marketing. The organic virality of this product is what sells itself. You know, so there's huge opportunity there for any merchants. As a seed company, you know, we're heading into Series A later in the year. You know, interested in speaking to anyone potentially about that. I'm the partnerships manager, not the CEO or the co-founder, so it wouldn't be myself obviously making decisions, but would love to speak to anyone at the end of this who may be interested, who does want to kind of link into our co-founders, Pete and Amy. And that's it. Here's where you can find us across social media, across emails. And if anyone does have any questions, feel free to fire them away.
And Joe, where does it normally start from? Is it recommendations? Do people just like? And you see that you had that very low marketing spend earlier on. What's the trigger?
Huge focus on SEO. To be honest, it's more the organic virality of the product itself. You know, if you share that out amongst 20 people in your group, they'll go and share it with 10. You know, and we've got groups across friends, family, colleagues, sports clubs. We had one recently, a K-pop band called BTS, if anyone knows them. But they had a fan group who was running via our platform to collect funds, share amongst the group. So it is that inherent virality of the product. You know, you share that link, you kind of come to recognise it, and it's that, oh, what was that link that you sent over? We find that a lot, especially within workplaces. I need to do a collection. Oh, Joe in marketing did a collection. What was that tool you used? And it is very much word of mouth.
Yeah, it feels like, well, there's a massive market for you, without a doubt. Is it easier to, like, I've used a couple of these things that work terribly, where I've not chosen them, but...
Hope that wasn't collective.
I really hope not. It can't have been. Example, I play five-a-side on a Monday night. Every week, we've got to collect like between £5.50 and £6.50 off everyone to pay. There's this kind of continual trail that goes on through the week. Don't forget to pay lads, don't forget to pay lads. And there's just, like, the app that the venue runs doesn't work. Like, sometimes it doesn't let you pay, sometimes it does. So we all end up paying it direct into his bank account. And I've said, have you had a look at this? And then not adopted it. So how do you kind of get people over that barrier? Because that direct, there's a real personal example, obviously, but there's a whole load of faff goes on every week there. Like, there's a solution.
Yeah, I won't call out five-side place, but we play the same one when I'm not injured. Yeah, it's kind of getting over that initial inertia. I think the best thing about it is the organisers, because any tool that will help them, they will embrace. Once they share it out amongst the group and they see how easy it is to click in and pay, straight away the inertia is kind of, that was simple, what was that? You know, and that's what kind of raises the eyebrows and go, I might give it a try. Yeah, obviously the more strategic partnerships we can set up with your five-a-side venues, you know, it's something we looked at earlier in this year. If we can get that, you can simply set up a QR code. You know, so if your mate turns up a minute before kick-off, boots in hand, like, oh, I've not paid, great, there's a QR code, you just need to scan, tap, and we've paid and we've done. So yeah, it's all about to limit that friction to contributors, but get it in front of them, get it in the right places. So yeah, partnerships I think will be huge for us this year, and hopefully we'll see a lot of growth off the back of that as well.
Who's running all the broken solutions that rubbish one that we're both referring to? I mean, it's a payments company somewhere, isn't it?
Yeah, there's someone somewhere, and probably what they've took is just a standard peer-to-peer solution. I don't think standard peer-to-peer, but took a peer-to-peer solution and tried to turn that into some kind of group element without really understanding the user who sits behind it. Right? It's a complex solution to build out a group payments platform that isn't just individuals tapping in. You know, there's a lot more that goes into it, whether it's events, whether it's gifts, sports. So it's all about getting the product right, get the product right, and then get it in front of the right people, and that's exactly what we're aiming to do.
Okay, right, we've got a question from the audience.
Bit of an end of the day question, so thank you, Joe. Just wanting to know, and it may be related to what you said about how you get people to use it. So can organisers, those who are collecting the money, mark it up? Can they add their own amount on top for the hassle of organising it? Because what are friends if you can't make money out?
I mean, yeah, if you want to ask for a little bit more because you put the time and effort into it, absolutely. It's very flexible in the way that you can distribute a pot. You put it on with a set amount, this is what we're fundraising for, this is what everyone owes, and you can be quite rigid with it, or it can just be free form. You know, you can send it out and say, look, here we're collecting, we've got roughly in mind a budget of £100, and then you can choose whether to keep the contributors anonymous or not. They can choose themselves as well when they tap in to pay. So you might have some people who chip in a £5, some people can extend to £20. So it's quite flexible in that kind of regard. But yeah, you could probably put in a little bit more for your time and effort if you wanted to, I'm sure.
Okay, any more questions? Okay, Joe, thanks very much. So that's bringing us to the end. I'm going to get Joe to come up and close the show. I just want to say a quick thanks to everyone. From earlier on, our first guest speaker today was Mike. He's still here. Thank you, Mike. I really appreciate that you've been with us the whole day. It's not often that that your opening keynote does that, so that's great. Thanks to everybody involved today. Big thanks to Joe and Ryan for all the organising. So obviously Joe can't thank himself, so I'll do that. So everyone give Joe a bit of a round of applause, and Ryan. So, thank you. Joe, did you want to close us out?
Yeah, and thanks as well, Julian, for comparing today and standing in for Chris here as well. So yeah, very ably done. Thanks, obviously, to everybody still in the room for being with us today. Obviously, disruption aside, I think it's been a really good day. Some fantastic content. Really looking forward to getting that recording shared with the wider community as well. So we'll be able to push that out to our full community of over 5K across the north. Really quick, just closing remarks from me. Before we tuck into some lovely refreshments outside and some drinks. Our next event is on the 14th of July up in Newcastle, so we're returning to a sort of regional focus with our events there. We will be live streaming that. We are planning to live stream that event, so people will be able to join virtually for that event. And we will be back in Manchester towards the end of the year in November for our annual Manchester conference, which will be hosted at the university. So yeah, I hope to see you all there. There'll be another FinTech showcase there, so plenty of opportunities for startups and scale-ups to get involved with that event. We've got events planned around ethical FinTech, hosting that one in Manchester in September. We're hosting an event in Liverpool all around the links between gaming and FinTech as well, and that's cropped up a few times today, so that should be really interesting. That's kind of it from me. Thanks for sticking with us, and we'll hope to welcome you to a FinTech North event soon. And just a final word of thanks again to Nick and Trib, the team at Discover, for kind of sticking with us on this one, and for all of our other sponsors and partners for making this happen. So thanks everybody, and please help yourselves to drinks and refreshments outside.